Good morning. Good morning, dear students. Welcome to another virtual class on auditing. Today we will be discussing about the due diligence, investigation and forensic audit. Not all together, it will be a 2-day class spread over 2 days. So basically today we will be discussing audit of in the areas of not the audit really, how you do the due diligence, what is the difference, why is it required, why investigation happens, and again how is that different from audit. And then the next class we will take up more on investigation and forensic audit. Right? So please, if you have questions, do ask me, and those who have attended the previous class on spatial aspects of audit in a automated environment and have gone through the study material, if you have any question, you can post it in the place where it is. You are given a place to post your question. You can do that. I'll be very happy to answer those questions. Okay. So with that, due diligence. So we are moving little away from the normal audit, but this is the area where chartered accountants in practice have scope to do work. Right? We carry out, as a practicing chartered accountant, we do carry out due diligence work from time to time. Okay? And it's very, very different from the audit, whether it is a statutory audit or otherwise. Now, what is a due diligence? What is the definition of due diligence? So I'm sure you are aware of to some extent, if not to a great extent, that if an acquisition is taking place, somebody wants to purchase something, taking up a unit or an organization or a company, some loan of a big value would be given by a bank, a due diligence takes place. That is, it used to basically investigate and evaluate a business opportunity. Though I'll be using the term probably investigation in due diligence also. When we move to investigation, you will see how it is different from investigation is different from due diligence. But it's a fact finding, right? Due diligence is basically fact finding about a entity, organization in which some other organization, entity or a person is interested to invest. Before making an investment, the entity would want to know whether it's really viable to make such investment. Okay, and we are not talking of a very small amount. So any substantial amount being proposed to be invested, a fact-finding mission is done, which basically can be called as a due diligence in any kind of an investment you can think of. Okay, our due diligence, the nature and complexity will change depending upon the complexity of the transaction, proposed transaction, but some kind of fact finding is always there. Right? So that's the basic definition of a due diligence. It's a fact-finding mission. It's an investigation to evaluate a business opportunity. Okay. It's a process of investigation performed by investors. Okay, as I said, the people who want to invest, a company who want to invest in another company, want to acquire, give loan by a banking company. This includes banking company also, right? Or banking financial institutions also. Into the details of the proposed, entity where they want to make such substantial interest. They want to know in detail. For example, you may not, from the face of the balance sheet, annual returns, even if it's audited, you may make a you can get an idea about the financial from the financial statements, the affair of the business, but you may not know the detail. You may not know the detail how those balances have been accumulated and reported. Only through the report. It may not be always possible. If for a consumption by a normal public at large, to get an idea, it's good. But if you have to make a substantial interest, even for an individual person, suppose you want to make a, you want to buy share, I'm sure you go into, do some fact finding before you put in the share. That may not be as detailed as a due diligence that we are talking here, because of the investment is less in terms of value probably, but the moment it is substantial based on individual's capacity, a detailed, thorough investigation or review of the affairs would be done. And it is not necessarily only restricted to the financial aspects of it. Please remember, my dear students, that it is not necessarily restricted to the financial aspects of an organization or a business in which an investor is proposing to invest. There are other aspects also. Operational, HR, tax, whole. Maybe while reporting, practically when we report, we take into consideration everything. Everything we take into consideration. It is not necessarily financial aspects. ICAI has very good guidelines on the due diligence, and we follow that. While executing such assignment. We follow such a guideline. It's an excellent one, and one has to remember that. But the scope should be very clear. If a member in practice is asked to conduct a due diligence only related to the financial aspects, he or she should restrict to that only. But it's an overall due diligence where a company has appointed a member in practice before he acquires the other unit or the company. Basically, the scope should be defined very clearly and in detail, that what are the things we should cover. They might ask the member that what should be covered, because we are supposed to be an expert, knowledgeable about this. So we know that it will not only contain the financial aspects, but other things are also taken care of, because it's important. It is important. We need to know viability. We need to know not only from the financial point of view, from other aspects also, which we will discuss. It involves an analysis carried out before acquiring a controlling interest in a company to determine that the conditions of the business conform with that has been presented about the target business. It is not only a rosy picture. It actually is what it claims to be. Okay? The investor has some idea, has some expectations. So the other party has presented the way the expectation, as per the expectation of the investor. But that is not all. One has to see the truth behind that presentation to ensure that the investors' expectations will be met should they make such investment, right? So that's the reason for a due diligence. And it can apply to recommendation for an investment, advancing, or a loan or credit, as I told you. All right. Now, what's the difference? What's the difference between the audit and due diligence? Simple thing. Audit is an independent examination, first and foremost. Okay, it's an independence. Independence is a important aspect in an audit. So it is an independent examination and evaluation of the financial statements, okay, of an organization to express our view, express an opinion, right? And due diligence is examination of the potential investment to confirm the material facts which they see in the prospective business opportunity. Okay, so they are very different. Audit, many a times it is guided by statutes, including the internal audits, tax audit, of course, statutory audit, and several audits that you can think of. They are mostly guided by the statutory requirements, whether within the country or for some foreign statute. But in case of a due diligence, it is not really so. And we work on behalf of the investor. You can work also on behalf of the, please keep in mind for your exam purpose, due diligence is not necessarily on behalf of the investor. You know, the seller can also appoint a member for due diligence. For what? Why he would do a due diligence? Can anyone answer me, please? The first and foremost is that an investor wants to have a due diligence in the organization where he wants to invest, right? This part we all know. But what I'm saying, the company who's selling, probably is hiving off or selling off one of his units, one of his services, business to somebody else. You know, some other company is acquiring a part of their business, line of business. Today you are seeing Future Group, you know, a part is being sold to the Ambanis. So, you know, it is not the entire company is being sold. A part of one part, a vertical, a part of the business is getting sold, being acquired by some other party. Now, why the seller would also need a due diligence? Can anyone tell? Post it in the answer. Yes, please. Good morning, Ambika. Good to see you back. So can we have an answer? Why would a seller would require a due diligence? Why does a seller need a due diligence? An acquirer or investor would need. That's what we all do. And most of our due diligence work is at the behest of the investor, really. But there could be such cases where a seller also may appoint or may request for a due diligence. Any idea? Okay, think of it. Whether the investor has actually have enough money to buy it. How would they know? You know, just because he wants to invest doesn't mean that he has the capability to make such payment. Seller is selling it off for money. They do not want to continue. They want to sell it off at a cost. Okay. So would the investor be capable? Are they financially that strong to make such payment? Right? So that can also be checked. That can also be done through a due diligence on behalf of the seller, right? To recover his debt, yes. To know their market value, yes, very true. Whether they are getting the, yes, John, that's a good answer. Yes. Whether they are getting the right figure or not, very true. Yes, for going, absolutely. Sairam, before going for a IPO, due diligence is done to know what is their worth in the market. You know, there are so many costs involved before somebody can go into the market to raise money. It is just on fine morning one day they decide that we will, get money from the market. It doesn't work like that. Lot of work goes behind, and one of the, yes, due diligence, whether they're to know whether they're, what is their goodwill, what is their image in the market. Is it a good time? Is it a good time is important? Is it a good time where investors will invest really? Whole lot of things are there. Very good. To examine the acquirer, Rahul. Yes. To know what he gets right price or not. Absolutely correct. Very good. Very good. So, basically, the difference between the audit and due diligence, you are aware that an audit is an independent examination, and we are just expressing where the auditor would express an opinion on the financial statements, right? In case of a statutory audit, I'm saying, and due diligence is an examination for the potential investment which a investor wants to make in a prospective business. So that's the difference. There is very clear difference between the two, and there is no overlap. Why what is the importance of due diligence? To confirm that the business, you have already explained very nicely. Most of you, all of you have done this very well. That the business is what it appears to be. They have not put up a very rosy picture when actually it is not so rosy. Okay, so one has to find out before making such investment. And that's why, we always are told that you read the background material even when we are investing, whether it is in, personal investment in shares, mutual funds, whatever. There is a disclaimer. You please read the the materials which comes attached with that. So to get an idea, and they're making all the kind of statements they're making, and so that's legally it is required to do so, and the investor cannot, and if we do not read it and then invest and then we lose, you cannot hold anybody responsible for such backfire, right? So information are available, information need to be read. So to identify potential deal killer defects in the target and avoid a bad business transaction. You thought it is very good, actually it is not. And because the due diligence was not carried out in detail, such integrate defects couldn't be identified, and it turned out to be a bad business deal, and that is naturally waste of money, of course. Yes, Ravi, you are right. Very good. Good. To gain information that will be useful for valuing assets, as you are already said, defining representations and warranties, and or negotiating price concessions. It gives us a good platform to negotiate, from the seller's point of view, say, or from the buyer's point of view, both ways. If the buyer, if the seller is proposing a price, and after due diligence, the buyer finds out that no, the proposition doesn't, is not that worthy, they can always have a negotiation, right? They can always have a negotiation. For example, to acquire a business, does it have to be always, making a profit? Will the buyer only see that their financial statements for the last couple of years are only showing profit, then only it will be a good proposition to make investment? May not be. The brand value, the brand value. You see the recent purchases made by Walmart, Amazon, whoever. It is not necessarily the companies which they are acquiring. They are all very, they are all very good as far as the profit is concerned. Okay. Otherwise, why would somebody sell? Right? If it is going so nicely, why would somebody sell? It is not, probably there are many reasons why a company can be sold. Okay, they don't want to continue with that line of business. They're moving away from the their core business activities, so they want to probably hive off one of such verticals. There could be so many reasons. The purchaser doesn't only see that. Of course, it will see the viability. Otherwise, why will they invest? But they have to see whole lot of things: their market presence, their market share. But maybe in retail, maybe they have a market share, but because of some operational issues which they cannot manage because of the scale and all, their profit margin is less. All right, that's why they say that this is not our core business. Let's sell it off. The buyer may see that their market share is good, their market penetration is good, but they're not making a profit the way they expected. So let's look into it. What are the operational issues? And probably the buyer may think that yes, we are good to manage this, provided this kind of market share, penetration remains, we will turn this company in our favor, so let's purchase it. So these things, these cannot come just by looking into or thinking what you are feeling by talking to the people. It has to be on paper. It has to be on paper. So the due diligence is undertaken. That let's go into the details, taking into consideration the financials, the other aspects of it, and then decide. All right. So to gain information that will be useful for valuing the assets, defining representations, warranties, negotiating the price concessions, and to verify that the transaction complies with investment and acquisition criteria. The purchaser has some criteria. that, that minimum return on investment, the ROI should be this. Okay, may not be on day one, may not be on year one, but year two, would they have such possibility of getting such ROI? That first year they may not want to lose also. They say, now we have to have a break even. Okay, so these are the criteria. These are the investment criteria they can have internally, that we will acquire only if we see that, well, from year one, from day one, there will be a break even, and from year two onwards, probably we start having a return on investment, whatever they want to project, whatever percentage they want to have. So is it possible? So those kind of criteria are set before an acquisition, and then with this they go out to do the due diligence, and it has to be told to the, to the member who would be doing, the firm who would be doing the due diligence, that these are the things which we are looking for. And please, when you give your report, your opinion, you please keep in mind these kind of considerations and our criteria. Okay, so those things are important from the member's point of view. We must have our scope very well defined, that what they're looking for. If they want, if the investor is looking for some figures, like, from year two we will have an ROI of 2% or whatever. So they have to keep that in mind and then work. All right. The various types of due diligence that you see, the classification, the various classification of due diligence: commercial, operational due diligence, financial, tax, information systems, legal, environmental, personnel. As I told you when I started today, that when we do a due diligence, actually practically, we take into consideration everything, right? But you can have separate due diligence also. Okay, that we will only do the operational side of it. Then we will see. Probably the investor knows about the financials. They get to see from the annual returns that, well, they are into loss. So they might just say, and they are okay with it, they might just say that, okay, you just please have a look whether it is viable from the operational point of view. Whether their factory is in good condition to run. Whether the factory is in good condition to run. When I'm talking of the factory in good condition to run, everything taken together, whether the land is free of any encumbrances, whether the factory land is free of any encumbrances, whether the factory, factory building, construction is in good condition. They do not have to, the investor will not have to invest a lot when they procure it and start operations. Whether maybe the factory is locked for several months, if not years, because they were not able to run because of the crash crunch, and that's why they are selling it off. So the purchaser need to know what is the condition of those plant and machinery. You see, the value of the deal will be based on that. So are they going to have more cash outflow when they actually acquire, because the plant and machinery are not in good condition? Whole lot of things one has to see. Who's maintaining this? If you just think of a large factory, just think of a large factory where huge, and it's completely automated in terms of machinery. I'm not talking of information technology. Automation means also the factory is automated. The factory is completely automated, and the product is from from putting in the raw materials to the output of the finished product, it is completely automated. All right, very less manual intervention is there, and the machines are foreign made. They are foreign made. So don't you think that operational due diligence should include, the review of the contract, not only the review of the conditions of the machines, where we may not be the right person to do so, right? We have to, so because as we go along, we will see how we define the team who will do the due diligence. So once we know that, we have to also, give our opinion about the conditions of the physical assets of the plant and machinery. Okay, computer, the furniture you can see and check from the document about the computers. Probably you can still able to give your opinion yourself, but plant and machinery you may not. You are, because you are not the right fit person So we have to bring in somebody who's technical. That way they is a technical guy, and they will evaluate and see whether the plant and machinery are in good conditions, and they don't have to have project a huge cash outflow should this deal is materializes. So those kind of things have to be taken care of. We need to have look into the contract which this company is having with the foreign manufacturer who has supplied the plant and machinery, and they maintain it. It is maintained. We need to look into this, that who maintains plant and machinery need to be maintained at least once a year. Just think of a large just think of a large steel factory. Just think of a large garment factory. It's completely automated. Those who have seen, you can visualize and can appreciate what I'm saying. Just think of such any heavy industry where it's completely automated. So just think of such, and what you can make out, but by looking at the plant and machinery, nothing. So not only you can look into the contract. With that you can do. That who maintains it. If there is no contract for the maintenance, overhauling is done, in-house or by people who are in India, whether that's good, whether, that's working well, or they're thinking that we will, we had discontinued with the foreign manufacturer. There are local dealers who can say, but it will be done, and it is being done. There is a lot of difference. So these what we are saying is this could be a defect in the proposition, in the transaction, that there is no maintenance, for the maintenance contract for the machine. The entire thing fall flat. The deal is done, cash is exchanged, and ribbons cut, the name changed, and you are the new owner, and after some time the machines are not working. Then the company starts looking, machines not working, not a problem. You please get in touch with the manufacturer who would give us the support. And then you see the contractors, the manufacturer says, we don't have a contract, so you please get into a contract first, pay us advance, then we will fly out our people from some foreign country to India. What happens? A contract cannot be done. That's another deal. The contract cannot be done overnight. So till such time, the people flies in from some other country and come to the location, machine, the plant will be shut down, and it is a complete backfiring really, because the shutdown means production is not there, and you have made projections. You had very good projections that it will continue, the manufacturing process will continue, it will not stop, and we will have so much of production, and based on that you have revenue projections. Just imagine, you have revenue projections, you have purchased raw material also, you have committed cash outflow, okay, and that you have to pay now. The material has come. You cannot say, no, my machine is not working, so I will not take the delivery of the raw materials. Can you do that? They will take you to the court of law. So you see, you are in a mess. An organization will be a mess. So these small things need to be taken into consideration in a due diligence. It takes time. Somebody says that can you do that? Many times we get such call. It has to be done very quickly in a day or two. No, sorry, we can't do that. We can't do that. We are not machine, So we need to take time. We need to think. We need to define make an outline. What are the things we need to see? Everything, whether we can do or we need some assistance. Then only we can actually think of execution. And then once we execute, we prepare, we make an opinion. We have to, go through our outcome of our review. Then only we can report. It takes time. So overnight it cannot be done. So one has to be very, very careful about. Please remember this from your exam point of view. So various type of due diligences are there. So let's look into this. So what do you mean by the commercial? Some more definition actually as per the book. This I am telling you impromptu from my experience. And so let's also read out the definition as it says in the study material. It talks about performed by the concerned acquired enterprise involving an evaluation from commercial, strategic, operational perspectives. So operational. Okay, operational. Please remember what we are operating. We are operating the machine, right? We are operating the machines. Will the machine work? How do you know the operational perspective. What are the things you are going to look into the operational perspective? These are the things, like whether the machines are in good condition, what kind of outflow we will have to run this machine, for the next say next 2-3 years before you replace and upgrade your machineries. Okay, so those kind of things. Who are the support? What are the support system for such operational activities? So these are the things one has to identify, because we are in such a country, we are in such a situation today. We are into such a situation today, dependent on so many organizations, dependent on so many people. Are you aware? The investor must be aware of such people on whom his company is going to depend on. All right. So he might be having some idea about those. Maybe the raw material is coming. Simple thing, operational perspective. The raw materials are all imported only from, China. Would it be a very viable today? The way, as things stand today, may not be. So one has to think the second source of another alternative source of the raw materials. And raw materials are not the business is such. Raw materials has to be procured from, outside the country. And the only source till such time, till before the investment is finalized, this company is only importing from China, and they probably are giving a very rosy picture. Probably actually they know that they cannot import from such country anymore, and because they cannot import from such country anymore, the viability of the business will be is not there because of the price. If they have an alternate source where the price of the material may be high, and naturally their profit will shrink to such a level where the continue with this business is no good. So that's why probably they want to sell off, and they are not telling you, and they are not telling the investor this. So it is on the responsibility of the investor to find out, why somebody is selling. If it is so, good and rosy and everything, why would somebody sell it? So it starts really from there. And as a practitioner, we also need to have an answer. Maybe the investor didn't ask such questions. You as a a kind of a consultant, we have to also advise the investor that you please ask these questions. Okay, maybe they don't have any internal source of fund. They are completely dependent on the bank that will come in the financial part of it. They're only working on terms loan and cash credit. They do. So one has to probably ask, why don't you are having revenue, but you are still so much dependent on the external fund? Why is that? What's happening? So those are part of the financial due diligence. So commercial is the operational part of it. One, we have to look into it. Commercial, strategic, what they're thinking in terms of next 5 years at least. Otherwise the ROI will not be there. Okay, you have to recover what we are spending. Whether proposed merger would create operational synergies. Whether you have people, many people may leave. It happens that people might leave. So who's going to run the operation? Whether first and foremost operational synergies mean that the acquirer is into similar kind of a business. Acquirer is into similar kind of a business. I gave you the example of Reliance and the Future Group, who are selling off, their brand, that retail brand. Now, why? One of the reason why it is being acquired by Reliance, because they are into retail too. So it is not, the business is not any different for them. They are expert in that. They have, so synergy would be there. Operational synergy will be there. It will just adding one more, it is not adding any extra line of business for them. They're just adding some more units to that existing business. That's all. They can think of it. They have 100 stores. They're adding another 100 stores which they're acquiring from somebody else. That's all. All right. But the synergy has to be seen. Suppose you want to, so if somebody wants to completely venture into a new business where he's not an expert, where he has never done it, that could be a major deal breaker. Okay, later on, he will go for the deal, but if he the moment probably he goes into detail of this, and then he will see that no, he is not an expert, the deal may not be materializing. So these kind of things one has to keep in mind, So the operational part of it, strategic and commercial part of it. The financial due diligence. It involves analysis of the books and records. It's very, this part we should be very comfortable with, that books of accounts and other information pertaining to financial matters of the entity. And after, so this will be done after the completion of the commercial due diligence. Yes, there is no hard and fast rule, but for your exam purpose, remember this, that you will see whether it is viable commercially, whether, synergy will be there. Why go into the detail of the financial part of it unless and until you don't see it's commercially viable. Okay, so whether they're making profit. If you see some company, investor may say, no, it's not making in profit. No, they're not making in profit. We will not go for it. Commercially not viable. All right. The stores are located in such a place. It's not commercially viable. Footfall will not increase. Contrary, they will see the stores are located in such areas. The penetration would be more. They are into suburbs. This acquirer, the purchaser, they are only into urban. So now they want to increase their market share by penetrating to the, rural areas, to towns, not completely villages and all, maybe to towns, smaller cities where they do not have any stores and they do not want to set up because it has a fixed cost, a lot of cost. So they say that these stores are already there in running condition and they are in smaller cities, smaller towns. So let's buy it. So they will see the commercial viability, even if they are not making a profit. Even if those units, those stores in the smaller cities and the towns, they are not making profit, but the purchaser will see that if I can run it well, because synergy is already there, I'm into this business, I'm making profits from my stores across the country, it is possible for me to run the business in small towns and the cities. But before they can think that yes, this will run in the small towns and cities, they need to know why these are not running under the present companies, why the present company is unable to run the stores in smaller cities and towns. What are the reasons behind it? Is it operational issue? There could be so many operational issues, like people are not there, products are not there. Would you yourself go to a shop or to a store where, this kind of a store where what you want to purchase is never there? Never there. No, you will not go. But you will go if you see the products, whatever you choose, whatever is your daily requirements, they're always there. They're always there. And the price, and the customers see that the price is not higher than the market price. If you go to a small kirana shop, the price is same. Not only price is same, but you get a discount based on the total purchase. So you are actually, a customer sees his own benefit, commercial benefit, that I'm landing up in paying less. I'm buying branded products with good packaging and all. Products are good, and you get under one roof everything. That's the reason the footfall is high there. Okay, so it's commercially viable for an investor to purchase that. But in the other hand, if they find out that the footfall is less, they need to find out why the footfall is less. It could be so many reasons. Staffs are not there. Staffs are not, they are not trained in handling the customer well. All right. Products are not there. Products are on display are not there. They are not available. Most of the time they say it's not available. So that could be the reason why these stores are not working. Then what the purchaser would do? Like Easy Day. Easy Day is one of the brand for this future group. They are such, in some places they run so well, in some places they do not run well at all. The simple reason, the products are now, it is a franchisee, right? It is being operated by somebody. It is not only I'm sure many such stores are not owned by the company. They are run by somebody else. All right. It is a franchisee. So are the franchisee stores are not running well? Will it have to be replaced in such a way that it will be owned and run by the company, probably yes, and this acquirer, the purchaser, they feel that we have enough strength, we can run it ourselves, we will not give it on a franchisee mode. It will be company owned store. And they know that if we run it on a company owned store basis, we will have full control and we will make it viable. Once we make it viable, we will try to find out some, franchisee, and probably we will hand it over once it runs, and terms and conditions should be there with the franchisee that you have to make, follow this, otherwise the contract is over. So these sort of things one has to think of. The purchaser and the member doing the due diligence should keep this in mind and work. So commercial viability, synergies and things like that. That's the commercial and operational due diligence. The financial is that we look into the finance in details. And tax due diligence generally taken up during it doesn't have to be a separate, but because for the exam purpose, we are specifying it separately. When we do, otherwise practically when we do financial due diligence, one of the major items is of course tax. One of the major items is tax. How much tax is pending? Simple thing. Has the seller paid the full complete tax? There's how many demands are, disputed demands are lying. What is the value of those demands? Okay. Will you be able to make out all these from the financial statements? May not be. It is not appearing in the contingent liability. Why we look into contingent liability? To find out what are the disputed case, undisputed or disputed case. But liability is not confirmed. Right? It may or may not. But many people now, because it is not forming part of the balance sheet and profit and loss account, I mean, there is a possibility that several cases are not reported in the contingent liability. So just by looking into the annual report, audited annual report, one may not identify such areas, such gray areas. And in due diligence, that should be taken up. Okay. Whether the tax has been, all taxes are paid, and we are not talking of income tax, all tax, whatever you can think of, direct and indirect tax, simple thing, all direct, indirect taxes, all right. So whether that has been paid, if not paid, what are pending, if pending, are they disputed or not disputed, if not disputed, why they are not paying, if disputed, what is the status of what are the cases going on, what are the demand, what is the status of the case, okay. Those kind of things. Who's making representation on behalf of the company into the tribunals and things like that. Each and everything has to be looked into. And that's why, my dear students, generally, practically, when we do this, we have a checklist. We can't remember, as I'm speaking impromptu, because, from my experience, I'm saying, but these things, if you get a job, even when I do this job again, I will not sit without a checklist. And which is being given by the institute. The institute has a guideline. Institute has a guideline under each of the head. Okay. And we look into these one by one. And we are, of course, we improvise. The moment you ask this, the questionnaire may say, the checklist may say, whether just look into it, whether tax is disputed, pending tax is disputed and not disputed. A checklist cannot tell you more than that. Rest comes from your knowledge and experience. If it is not disputed, why are you not paying? Is it because of money? Why? Then, you start asking questions. Why money is not there? Is the expenditure more? All right. Why expenditure is more, or why the revenue is less? You see, it is cascading, and one cannot lie. The person will get entangled because you are unable to ask and give an answer to the question that we are putting forward. They can answer one question incorrectly, or they can lie. But the next question it cannot go on. If it goes on, then the member is not doing the right job in the right way, right? So they will get caught. The other part of it is disputed. The tax is disputed. What dispute? Okay, the next question, what are the disputes? Okay, they will show you, give us a full list of dispute. Now you may ask, student, I'm asking for the disputed case. How will you know that all cases are being reported to you? Very good. They may not, they will choose to give you only what they want to. They may not give you. So you have to sit and go through their papers. You please bring out all the papers. If they, take away some papers from you and hide it in their house, well, completely we cannot say that everything we have checked. We can go into the internet, we can start searching. We can start searching what are the pending cases. That also we have found out in many cases. We may also, search for news. We do not express our opinion based on news. That we do not do. But we identify the news. What is the news? Somebody came on news that, there is this thing has happened. Then we ask the, seller that we read this, is it true or not? In most of the cases, they will say it is true, but the fact is not completely correct. So we'll say, you please tell us the fact. So that's what I'm saying. It takes time. It takes time, and it needs an investigating type of a mind frame, completely different from a normal audit, right? So I hope you're appreciating that. Any question? Okay. Satrudhan, we will come to investigation little detail. It is specific. For the time being, due diligence, the difference between due diligence and investigation is that in due diligence, you do it on behalf of an investor. That's the main difference, that you do it on behest of the investor and look into the details of the companies where they want to invest. Investigation could be completely different. That something has happened, somebody appoints you to investigate it. So that's the primary difference. Due diligence is for a deal that's going to happen between a purchaser and seller, and the purchaser wants to have a due diligence before he commits money. A bank some company has approached a bank for a huge loan. Okay, how the bank will decide whether such loan is viable, the recovery is, how will they ensure that the recovery is correct? Many places as an auditor, in a bank's auditor, statutory central auditor, I have seen the advance has become NPA in the year 1. So can you imagine, what kind of bad due diligence has happened? There was no due diligence. How can it become bad? And I'm not talking of very small amount. It's a huge amount, okay, in a large branch, and it has gone bad within a year. So probably there was no due diligence. So committing. So due diligence, the difference between due diligence and investigation is that in due diligence, a purchaser wants to commit. They wants to make some investment, okay? Before making such investment, they want to know whether such deal will be viable for him in the future to come. An investigation is for a specific reason. Something has happened, and some authority, somebody, even it could be an auditor. It could be, it could be the company themselves. They may approach the body or a member for investigating into the detail of it, or authority. In most of the cases, it is authority. Some authority will come to a member or to other bodies and companies that you do look into this, what had happened. Okay, that's the difference between investigation and the due diligence. I'll look into your case, Srinivasa, a little later. Okay, I'll surely answer this. Okay, so that's the tax part of it, that we will look into the various taxation part of it, and a little more the information systems due diligence, looking into the information technology, because as I said, most of the companies, almost all companies are using the information technology for their business processes, and we need to see what is the status, because one has to remember that that is also there is an involvement of capital expenditure and revenue expenditure. Capex, OPEX is there. So it could be very much possible that the system that they're using, they're very outdated. and they are not no more supported by any vendor, any manufacturer. So that means what? That it will, in case you have a problem, it will not run and nobody will give a support. So to continue with the business, you have to immediately replace that. And it's not like you go to the a shop and buy some computer and come and start. No, it's not like that. So it will be a big capex outlay, revenue expenditure involved, time is involved again. Time is involved, and till such time the systems are up and running, the business will not work. Just keep for your exam purpose, remember, information technology system is used in organization to assist them to achieve the business goals. And from this in mind, you must look into the due diligence part of the information technology. All right. Legal due diligence, as I said, any legal matters, whether it is tax, whether anything. Today we have it could be so many, we may have to look into the RTI part of it, and see what kind of, questions somebody has put in, or someone has asked for some data, and we have to look into this. Okay. Legal cases. Okay. And if it is seen that some legal cases are such that they're surely to lose, and the investor will think hard before committing. Environmental due diligence, whether the environment itself is conducive to, for operation. It includes, whether the acquirer can get adapted, can adapt the environment, so that has to be looked into, and including the personal due diligence. People, the investor talks to the people. The investor come and talks to the people to give them the comfort, to feel the pulse of the, their human resources, because they always feel shaky. In case of an acquisition, there is always this doubt that, once there is a new management, old people, old staffs, the existing staffs, old doesn't mean age-wise old, I mean to say the existing staffs of the existing management will not be kept. They will be, asked to leave, and the new management will bring in their new staff. May not always be, because to run, as I said, the stores, if somebody is picking up the stores, purchasing the stores, why would they replace? But if they might think of replacing, if it is identified during the due diligence that because of the people, the stores were had become not viable, and they were incurring losses, those kind of things. Okay, then there is a risk that yes, people may be replaced. So, but any company who's acquiring, they do not want to go with that idea that we will throw out the existing staffs and we will bring in our staffs. Not always, unless and until it is absolutely necessary. And when somebody is acquiring because of loss or operational issues, it could be necessary that some heads are removed and new people are brought in. I have seen this in my practical experience, where a company is very into cash loss, and when it was that the management changed, and couple of head of the departments were changed, and not a single manager and down the line staffs were replaced. Only couple of heads were changed, and within a year or so, within 2 years, 3 years time, within a year the cash loss had gone, and then from year 2 and 3 they started making small profit, and it became completely viable. That at one point of time this company was thinking of winding up, and it was a very old company run by a very big organization, business house, but somehow it was not working. So the management changed, and things completely. And when I'm saying management changed here, internal management changed. This particular business group that I'm talking about, they have many companies. They have multiple companies, and they just brought in one of their, management of a good company who are doing very well, and they are into all type of businesses. The moment they replace this, some of the senior management, and things changed. Okay, things changed and they acquired, and of course that company acquired this particular company. So certain things we need to follow when excuse me. To achieve the objectives, due diligence process can include, very briefly, as I said, these are there in the guidelines and it has been picked up from the institute guidelines only. Description and history of the business, background of the promoters, accounting policies and procedures, management information system, MIS, okay? Detail of the management structure, these kind, organogram is very, very important. Knowing the promoters are very important to identify where the problem lies. You cannot give a solution to the purchaser, to the acquirer, unless and until a member knows where the problem lies, why they want to sell. All right, it could be because of the promoter, as I said, that that some of the business heads were not good enough, and that's why it was not viable. So the due diligence when conducted, we identified that yes, it's good to go, except for these are the areas. We didn't say that you remove them, we just said these are the areas because of which operations are hampering and having a cascading effect on the production, sales, everything. Okay, and otherwise it's very, very much financially, commercially absolutely viable. So details of the management structure we need to know, and trading results, both past and recent past. Okay, important. If continuously the company is under loss for several years, probably it is not, and it cannot run in loss for several years. No company can sustain where from the fund is coming if a company is not generating internally, and no bank will provide such credit line if the company is continuously making loss. So result of the maybe last couple of years and recent past, assets and liabilities as per the latest balance sheet. We will discuss all this. Why need to look into the asset and liabilities, and current status of the tax assessments, income tax and indirect taxes, cash flow pattern, how the cash flow comes, where from the cash is generated. Is it completely dependent on external sources like banks, or they have their own fund generation capability also? Those kind of things have to be looked into, and projection. Then you make a projection for the future profitability. Generally, we ask the client, you give us a future profitability. They know, because you see, based on this future profitability, they can negotiate with the purchaser. So it is on their interest, they will prepare it. We will actually review it and see it how good it is. We will not make the projection because we are not in a position to do so. But they will have to prepare it. The seller has to prepare it, and it is the member's responsibility to review it and give the correct decision, opinion about the correctness and the again, you remember the code of conduct, that we cannot vouch. We can say, under these circumstances, if these conditions are met, the future profitability looks okay, achievable, that much we can say. Okay, keep that in mind. And so these are the things we look into, and this is mainly the brief history of the target and the promoters. These we review. Nature of business can be anything. And some of the things we look into, like employment, the location, supply, wage levels, contracts. These are important. These are important aspects. These are very important aspects in the about the history. That are they dependent completely? See, today, we have seen now that, and it is a fact. If you are not aware of, in large manufacturing factories, the dependence on contract workers are very, very heavy. They do not have laborers or workers on roll. They would be maybe 10%, 15%, maximum 20% of the laborers or contractors are on roll. Okay, but the factory is mostly, essentially they are run by the contractual laborers, workers. And who supply these contractual laborers and some workers? They are supplied by contractors. Where do the contractors get such people? These, you see, we have been hearing about migrant workers. They are the migrant workers. Where factories are not there, in some part of the country where factories are not there, they are not, so advanced state There are many advanced states, there are many less advanced states or poor state in the country. So people migrate, they do this kind of a migration happens. And the workers, they go there, laborers, they go there into those, states where work is there, and they work in the factories and through a contractor. Through contractors, they do the work. So, and what are they following the wage pattern given by the government of India? Okay, so everything we need to see. Are they even we need to see whether the PFESI is being deposited. Can somebody, let me ask you a question. And my question is, as a member, I'm doing a due diligence work, and I'm reviewing the employment part of it, including the payroll, the workers' payment structure, their payment structure, and what are the payment components, pay components. Why do I have to also see whether the PFESI, which is a statutory requirement, has been deposited by the contractor? If yes, how do we see that? How do we check that? You are working for the company who has used the workers through contractors. Now what I'm saying, this PFESI is not deposited by the company. The PFESI for the workers are deposited by the contractors. Company merely reimburses, pays the contractor for the PFESI. How the company know? How is the company makes or ensures? How the company ensures that the PFESI is actually deposited to the authority? And as a person who's doing a due diligence, how you will ensure that? Please post a answer. Post your answer. Yes, Srinivasa, they can. It depends on the deal. It completely depends on the deal, what they're doing. What you are saying, it is possible. Okay, it is possible that they still will hold some shares. Yes, very much. 100% they may not be selling it off. That's what you are saying. Yes, of course this is possible. Okay, but how they are, so how they are going to continue just by merely becoming a shareholder? Okay, so if they're only a shareholder, they will get the dividend, and they will have their voting right, whatever percentage of share, but they may not be it may not be of substantial interest. It may not be, of course, power in the management. That may not be there. That may not be there. It completely depends on the deal. All right? It completely depends on the deal. But what you said is possible. Yes. So what is the answer? How is it required for us to see that PFESI has been paid for the contractual laborers and workers? And if yes, how do we see that? If yes, why do we have to see all such details? You will say, you can argue. You are not posting a question, but let me ask you a question. They may argue that I am going through the audited balance sheet, audited annual accounts. Nothing has been reported there. So it is expected that it is being paid. Why do I have to check again? Well, it depends on the, reviewer who's doing the due diligence. It depends on the member who's doing a due diligence. But if you have not done the statutory audit, right? If you are not the statutory auditor and you are doing the due diligence, it would be good. It would be good for your own benefit do the work effectively and efficiently. It is good to see all these details once again. They might have missed it. You never know. There's nothing reported in the internal audit report, nothing reported in the statutory audit report. You have an argument. But later on, if it is found out by the acquirer and based on your due diligence report mandate, the purchaser finalizes deal, makes the payment. After couple of months into the new business, a court order comes. A court order comes that the contractor has not paid crores of PF and ESI, and these are quite, normal. These are not utopian. These are very much fact. And you are responsible. You are responsible. So it would be good to review and see if the necessary statutory dues have been paid by the contractor, whoever it is. It has been paid by the contractor. How you are going to see it? We will see it by taking the monthly payment details. Yes, we have to check whether any tax litigation may hamper the... Yes, of course, Srinivasa. How will you check? We will ask for the simple thing. We will ask for the payment details from the contractors. If that's not available with the company, with the seller, we will ask for it. And we will ask them to match it. What happens, practically the contractor will show you, payment made for 1,000 workers. And for this particular company, they are only supplying 200 workers. How do you know that these 200 workers are actually included in those 1,000 workers payment? We don't know. So we have to have detail of, worker wise, such detail that's statutorily required, and they have to maintain it's there. So we have to know what we are looking for. So that will be available. We will ask for it. And because these PF ESI details are today mandatorily available on internet, whether it is a private trust or with the government, it is available on internet. We can ask selectively. Randomly, that call some worker and let's check your PF. This what is the amount, and confirm it whether it is up to date or not. That can be done. All right, and there is no harm, and nobody can deny that. You deny a member who's doing a due diligence work. Nobody can deny us that. So we can do that. All right. So that's the government regulations I'm talking about. That's very important, that statutory payments are made. Cases can go on. Cases will always be there. Cases are always there. So one has to see the, the intricacy, the complex nature of the cases, and you have to make a judgment. Probably you have to take a help of lawyer if you cannot make a judgment yourself. Probably you have to make a take a help of a lawyer to identify, to find out the what is the status and what could be the result of such case. I'm sure, but it doesn't generally require. We can read and we can make out. But thing is that we have to read it. We cannot blindly depend on somebody else. But you can do that. That can be done. That's what I'm saying. What kind of products, whether that's very important in the financial due diligence. Whether, I told you about the import part. So one has to be careful that do the company, they have alternate source of, material, except only, or it is only from a particular country. Okay. What is the source, and whether such source is clean. A whole lot of things one has to look into. The sale part. Now coming to the sale part, revenue part of it. The import part of it for the pricing and the liability, that how much you are going to pay. Okay, what liability you are actually taking through the deal. Now what about the revenue? If you do not have the revenue, which is not generated from the company that you are purchasing, that means you have to pay from your other sources. So it may not be a good deal. So from where the revenue is coming, we need to see whether it is export oriented or domestic, or mix of mix and match of both. Who are the customers? Are they long-standing customers, or it is arbitrary, random? And what are the customer list? How loyal they are with the this company, because you are purchasing probably a business which has several competition in the market, right? This is not a monopoly company which you are acquiring. It is there are competition, so you need to see how long the customers are with your company, whether how much customer complaints are there, how the customer complaints are actually addressed, and whether the customer, over a period of time, customer complaints have reduced or increased. Whole lot of things. Again, it's full of checklist and detailed review. So major customers and the contracts, terms of payment, very important, whether it is a cash, all based on cash payment, or it is on credit line. Large organizations would definitely deal on credit lines, payment made on credit. So then vis-a-vis you see how old are the dates, are they belong to the customers who are working on, who lists the product based on the credit lines, how old are their balances, what actions are taken to recover, how much is written off, and every year. So whole lot of things so these things to be kept in mind. Okay, what are the market share? Of course, one need to see over a period of time whether it has declined, it has increased. Pricing policies, whether the pricing policies are reviewed, very important in large organization. Pricing policy, you cannot sell especially any market today. Why retail anything? The price has to be decided. Now that price cannot be very different from the competitors, right? As I said, the company that today there is not much of monopoly. I mean, you think of any business, they're not I can't think of any business today in India which doesn't have a competition. Okay, you think of insurance, you think of bank, you think of retail, manufacturing, everything, service, everything has a competition. So pricing is very important. How do you do the price? So if you increase the price a little more than somebody, naturally you have to give more. So can you make it happen that you give more for that extra price that you're taking? And how confident the customer would be to spend that extra money? Are they comfortable? Are they sure that you can give that extra? Whether they need that extra? All right, whole lot of things are there. Okay, so pricing policies, the reputation of the product. So I just got a call day before yesterday. I purchased some medicine, regular, not prescription based, some supplement, I should say supplement. I purchased some supplement online from Amazon, and I'm using it. So this lady calls up, and she called me up, and she said, "Madam, you didn't give any feedback for the product." So I said, "How can I give a feedback for the product? Because this is a supplement, and I'm just using it for say not even for a month, and I can't feel the difference. I can't see any difference. All right. So if you're so I cannot give you a feedback." So I was curious, and I asked that, "Why do you want to know?" She said that because the moment naturally, because if I give the good feedback, others will see online and they will also buy the product naturally. This is the way it happens, and so it works in an online platform, right? So one has to remember these the reputation of the product. So if we generally go and see how many likes are there, how many dislikes are there, one has to see, there could be many fake likes and fake dislikes. So let's not go into that. But one should not, why I'm telling you this, one should not only judge by the likes and dislikes. Don't judge the reputation of the product only by looking into the likes and dislikes in a online environment. No, I mean, you have to, that is just one of the criteria. You have to look into other things also. If the product is so bad, how come it is selling so much? People cannot be fooled. So those kind of things. Warranties are there. How much cost has been incurred from the warranty? What can you answer me, my dear students? I said we want to review, we want to check that whether the product comes with a warranty. Fine, you see that the product comes with a 6 months warranty, 1 year's warranty. Additionally, I'm also saying that I'm doing the due diligence. I need to see how much cost has been incurred on account of warranty. Why do I have to do that? What benefit or what extra I will get to understand about the business if I also see the warranty cost? Please post your answer. Please post answer. I'm just giving you practical examples. Practical examples I'm giving you for your benefit to write in the exam, in case you get a multiple choice questions, and multiple choice questions do come. So why would it be required to also check the cost of warranty, provided there is a warranty clause attached with the product? I'll wait for 1 minute. Somebody please volunteer. Somebody checking the Aditi Kumar said check the PF returns. Yes, That is for the PF part. Yes, very true. But along with that, you also have to check, don't forget, Aditi Kumar, that we also have to check the detailed name, names, because return will give you just a figure. So we are concerned about the workers in this company. All right. So one has to be careful about that. Say for example, now, if right now some deal is going on, it will be very important for the purchaser to know whether mediclaim has been there for all the staffs who have joined back, or who are all the staffs. That's a requirement of Ministry of Home Affairs. Okay, that everybody who is joining the office during the pandemic situation, it is the responsibility of the employer to ensure that they have mediclaims. Whether if they are doing it themselves, that is a different issue, but if they do not have, it is the responsibility of the employer to ensure that it is there. So suppose such deal is going on and we overlooked this, the purchaser overlooked it and we also overlooked it, and then when the deal is finalized, you start working, and God forbid something goes wrong with some person, and then he goes to the court and says that no mediclaim was done, and huge penalty can be imposed. Huge penalty can be imposed. So those things one has to be very careful about. So yes, please. Why do we need to see the warranty cost? We need to see the warranty cost. From there we can find out the quality of the product. If you see too much of warranty cost is there, it means, indirectly, that the product needed lot of correction, rectification. Because warranty means that within a year, we have given 1 year warranty, right? And within a year, so much cost of has happened. Okay, that means so much of sale has happened during the year, and within that same year, so much of warranty cost. That means there was some problem with those products. It will give you a idea. It will give you a very good idea about the quality of the product. Otherwise, you wouldn't know. So this is another way of identifying the quality of the product. Nobody will say that my product is bad, right? So this is another way to identify. Okay. Order status, yes, already booked, committed order status, those sort of things we can see. We can talk to the customers, trends, marketing strategy, the objectives, and the manufacturing processes. If you see the manufacturing processes too old, they are using too old machineries, and because of that the productivity is less. Why the productivity, why the sale is not going up? The simple reason, because you are knowledgeable. A member is knowledgeable about these kind of business elsewhere, because it's elsewhere it's going on, and they are doing much better than this company. Why? There could be so many reasons. One of the reasons could be the manufacturing process being followed by this company is very old, and hence their productivity is less, and naturally the sale is less. So the purchaser has to think how much, whether it's viable, because they have to think of the capex immediately after they purchase. All right, keep that in mind. Long-term contracts, both way, purchase and sales, committed long-term contract. Stability of the supply chain has to be seen, especially in case of retail business. Supply chain is so very important. So how that supply chain has been established. So because the delivery is so important, how do you keep a market share? So these answers we know better than anybody else probably, that how a market share will be retained. Forget about the increasing it, and how the market share can be retained so that it doesn't decline in a retail business, the supply chain. If the supply chain is not established, supply chain doesn't mean that you have to have your own fleet of transport. No, you don't have to. You don't have to have your own fleet of transport. So it can be purchased from the local market. It can be taken from based on the contract. Again contract. We have to see how much expenditure they are incurring on purchase from the open market. Small things go a big way. Purchasing, taking up transport, trucks and trailers from open market will be much costly than through the contract. So we have to see the pattern of such transportation cost, because in retail industry transportation cost is a major component of the cost. Margin, one cannot have the margin. Too high margin is not possible these days. It is on the economy of the scale of how much quantity you are selling. All right. So if you see that the cost of the transportation is too high, one has to see why the transportation is so high. And you will see that they do not have any contract for transportation. They are, whenever they need, they buy it from the open market. I mean, that's a absolutely bad way to do business. All right. So those kind of things one has to look into. Terms of payment, very important. Terms of payment, that you will, both payment wise as well as receipt wise, that you sell based on a staggered collection pattern, that last payment will happen only, after the say after 3 years and all. So the whole lot of things we need to check, both from the outflow point of view and from the receipt point of view. I talked about imports, export method of delivery, such as just in time. Just in time, we do not accumulate. We do not accumulate. Delivery here, just in time, means we are acquiring material, we are purchasing material. The company is purchasing. Are they accumulating the inventory a lot? What is the turnaround time for the material? These things we check even for our audit. That stock holding, how much is the stock holding? How much is your stock holding? Don't you calculate that? So we need to see 3 months, 5 months. Still 5 months. 5 months is also on the higher side. I mean, if you see 7 months, 8 months stock holding is there, why? You need to ask question. There could be reasonable answer for that also. It is a seasonal product. It's a seasonal product. Just imagine, the company who's manufacturing apple juice or any fruit juice. All right. All fruits are not produced throughout the year. Sorry. Mango only in the summer, apple only in the winter. So they have to purchase mango in the summer. So when you go, you will see probably the stock holding of mango is very high, and stock holding of apple is high based on the season. Now one has to see what we have to see now. How much is the write-off of the inventory? Because why you need to see this? You need to see they purchased it all right, and it is absolutely correct that they purchased it because it's seasonal. Can they maintain such stock? Can they? Because they are perishable items. I'm sorry. They are perishable products. So how they are maintaining it? They do not have a warehouse which is where they can maintain such stock. And what happens? They have to write up because they are rotten. Okay, so is it a good operational activity? No, there is a problem there. I know from my practical experience. I have seen in cotton industry, cotton industry, garment industry, not cotton. Cotton is not manufactured. Cotton is a produce. Cotton is a produce. It's cultivated. So in a garment manufacturing industry, I have seen how cleverly they have managed the cash flow for the cotton. They do not know cotton is also seasonal. The types of cotton, they are very seasonal. So they purchase when it is produced, when it is harvested, they purchase it. They are not purchasing it. They have an agent. They have an agent who will purchase it on their behalf, and they will supply it based on the production schedule, and they will make the payment to the cultivator or whoever, middleman, whoever. Okay, and the client will pay. The company will pay to the this agent who's actually holding the stock only based on whatever they are lifting for the manufacturing for their manufacturing plan. So if today they are lifting so much of quintal, they will only make the payment for that much. And there are further details into the contract. It is not only that, there are some more. So you see, there are two benefits. The responsibility of keeping the cotton in good condition is they have passed it on to the to the vendor, to the agent. They are not responsible. They have only given them the shade, that this is the place, warehouse. They have given the warehouse where they can do it, but maintaining it in good condition, and they have parameters, that these are the parameters which must be maintained, and every time when they take it, they weigh it quintal wise, those parameters are also checked, and they are rejected and they are not paid if any of the parameters are failed, because it will have a direct impact on the garment. okay, which they cannot afford to do. All right. So this way they are actually taking the material just in time, their stock just in time, and also you see the outflow is, cash flow is also managed. They do not commit a huge cash flow, and they are neither committing storing or holding the stock in their books. So it is the responsibility. So the whole lot of, I just gave you one example, okay, just in time. And it should not be such just in time that you do not have stock. Your manufacturing should not be hampered because the company resort to just in time. So one, that just in time has to be defined. How much just in time? If the company is dependent on imported material, so it takes time to order, negotiate, put the LC, get the papers, then ship it, commit. So it takes time. So it cannot be that much of just in time compared to the fact that it is purchased within the country and it has to travel via road or railways. That the second one will be much faster, but the first one, importing, will be it will take time. So coal many a times, I can give you an example, coal is imported and also indigenous coal is also taken. All right, the quality of the coal is not always similar from all the coal mines. For some part they might purchase import coal, and for some cases they will procure coal internally. So you see, the import will naturally take time, and they have to decide that how much quantity of coal, imported coal, they will stock, and how much will be stocked if it is the domestic coal, right? Inventories, as I said, franchisees, licenses, patents, all these are important. Franchisee, I told you, licenses are important, any license that you're talking about, patent, do they have a patent right on the product, or they're using something for which somebody else have a patent? There should not be any infringement. Patent we are talking, there should not be any infringement, all right, any non-compliance. License, there should not be any non-compliance. Simple example, they are using computers, okay, a manufacturing factory, a large manufacturing factory, they are using 1,000 computers in their factory. Do they have proper licenses, or they are using any pirated software? Absolutely not done. Absolutely not done. Today they may not land up in trouble, they will land up surely in trouble tomorrow. All right. So whether adequate licenses are there. Labor licenses, that's a hard IT part of it. Labor licenses, do they have? Are they following the work schedule as per the labor license, labor law? Those sort of things. License should be there. Trade licenses, and shop and establishment, everything. Just think of, depending on the situation. So these licenses we have to keep in mind, and we need to see whether they are active. They are active. They are not expired. What happens now? You come across a situation where it has expired. Immediately we have to see if you see shop and establishment license is expired and they have not taken it, how old it is, how much money it will take to renew that license. Mediclaims are not there. The insurance is not there for the plant and machinery. Huge plant. All right. No insurance is there. Insurance has expired. Okay. How much money it will take to renew it? Renewal may not be possible. In several cases, renewal may not be possible. It has to be done afresh. So these sort of things one has to keep in mind. The franchisees, the licenses, the patents, important expense categories. I don't have to tell you. One has to understand what are the important categories of expenditure in terms of the business. So if it is a manufacturing business, yes, the purchase, the procurement cost, the raw material cost, intermediary cost of intermediaries, cost of labor. So these things, cost of transportation, for the sale. If it is not being reimbursed by the customer, so how much is being actually borne by the company? So that way one has to see. All right. So major head of expenditure, and then you start get into the detail review. Foreign currency assets, the liabilities and the transactions commitments. We have imported, so we have liability to pay the the exporter from whom we have imported. So liability is there, asset is there. We have sold to the we have export business there. So what is due from them? That's the foreign currency assets and liabilities, and various transactions, at what rate, spot rate, or it is a what rate we are taking. So whole lot of things one has to decide upon. Legislation and regulation that significantly affect the entity. I had been talking about that. And of course, information system. Accounting policy procedures should be there. What policies are they based? A simple thing. I mean, when they make the entries, many places they will see, we had been talking about real-time environment. It is not actually in practice, it is not really that real-time. Many times it does happen. You will see, probably you have seen also, they will do the payment and they will put the entry later on. It happens. Can anybody stop it from happening? You tell me. You tell me, please, post an answer. Post an answer. The situation I am giving, that they have an ERP system, so-called, real-time environment. But in spite of that, some vendor called up the finance and requested, it's a high-end, vendor, and they said, please release the payment. The finance says that, but I haven't received your bill. The bill is not yet approved. How can I make the payment? He will say, no, you can make the payment. Can the payment be made? Yes, the payment can be made. It is just an entry and instructing the cashier to make the payment through NEFT or through a check even. Will the system stop? You cannot make the system so rigid to stop. To stop such ad hoc payments, right? Ad hoc payment you cannot. Advance you have to pay. Where you don't, so where you have the invoice. So we insist that you should have an invoice for advance also. So these are the policies and procedures. You see that whatever, we must have a document in place supporting the transaction and should be ideally going through the system. So, but otherwise also it can happen. We make the payment and we regularize it later. So it could lie as a, miscellaneous expenditure. It didn't go into the creditor's ledger also. It is just an accounting entry. Can it not be done? It can be very well done. The cashier will ask, which account I should post this, sir? The sir will say, you please post it in the miscellaneous general ledger code and make the payment. Can it not be done? Very much can it be. It can be done. So, a member who's doing the due diligence, it is very, very important for us to review the GL scrutiny, GL codes. GL scrutiny is very important to identify these kind of, expenditure which might have gone through, and you cannot make it out from the face of the audited balance sheet. Can you? You cannot. You do not know what constitutes miscellaneous expenditure. Maximum fee you can see, you can match it with the previous year and see. Clever accountants will also ensure that it doesn't go much more than the amount incurred last year. So you are happy. You said, okay, it is almost similar, not much, only 1% has gone up from the miscellaneous expenditure compared to last year. So it's okay, we don't go into it. But you have to go into the detail of the miscellaneous expenditure to identify what does it constitute, right? Keep this in mind. So we need to have accounting policies. We find out whether such company has accounting policies and procedures, that how the data should be recorded manually or otherwise. Okay. And review of the financial statements. I have explained this. Okay. We need to review common basics. I said some of the common basics. This is not there in the study material, but I thought it is important. These are the things we start with, when we do. Basically, then we go into the detail. That general corporate matters, financial accounting, taxation, technology, intellectual property rights, product services offering, operations, product may not be viable, operations, sales, marketing, human resource, personnel, legal. So this is all, and what we are doing, what we are showing as per our study material is individually these things. Okay. So I have already explained this. Cash flow patterns, right? Incoming as well as outgoing. Okay. The reviewer has to be careful about the hidden liabilities and assets. One has to look into that. The company may not show cause or any show cause notices which have not matured, right? Unless until it is a matured liability, it cannot be recorded in the books of accounts. We can't help it. So it should be actually shown as a contingent liability. Sorry. But they have not shown that also. They are saying, and you cannot argue always. They say it is just a show cause notice. There is no demand. Demand, if it has come, probably we can think of a contingent liability. But if there is no demand, it is only a show cause notice. Okay? So these materials, these things are important. Why such show cause notice has come? You know, that show cause notice will give rise to a demand and it might go into a committed liability. Okay, so from the due diligence point of view, we need to review it. You see the difference in audit, it is not important. Show cause notices come, maximum thing you can report it. You know, if you think it could be of material, you know, it could give rise to some material impact. Okay, but you may not, you may choose to do so. It is just a show cause notice. You have to judge. But here it may play a very important role. These are deal breakers, deal killers. The company may have given comfort letters to banks and financial institutions on behalf of somebody. You are actually giving some guarantee on behalf of somebody. Alright? That should the person fail to pay, I will pay. That's letter of comfort that the other party has actually taken LC. Okay, or some loan from the bank. But that company or that person doesn't have enough financial background. Alright? So, the bank said that we need a letter of comfort or a guarantee from somebody else who's financially better stable than you. And this company, which the purchaser wants to purchase, has actually given a lot of letter of comfort. Please post an answer. Why it is important? Why it is a hidden liability? This you know. This has been in news for several years and you have seen that this could be so dangerous. Okay, so answers have come. Yes, Rahul, I'm sorry, I changed the slide. Yes, we have to check tax litigation by checking the PF returns. Yeah. Please tell me a hidden liability for letter of comfort. Why it could be a hidden liability? Yes, please. What happens if we ignore to look into this, or we fail to identify any such letter of comfort which may have been given by this company who is put upon sale? The letter of comfort may materialize, isn't it? The other party may fail. They may fail to pay the bank, and because of the agreement is such that if that payer fails to pay, you will pay. So it may materialize to a actual liability. Please remember, in case of due diligence work assignment, it is our responsibility, the member's responsibility, to review the other companies' data who are related to this particular company who is put upon sale. Example, this. Whom we have given, whom this company has given letter of comfort. How much viable they are, how good they are. Because this company is being put upon sale, what impact they will have. Are they directly related to this company? Maybe they have common management. It is possible. It's a subsidiary. It could be a subsidiary this thing happens. It could be a subsidiary. They can have common management, and hence they have given a letter of comfort. Letter of comfort is given only when they are known, right? Company to company. You're a better company. Please help me doing the business. So, okay, I give you the letter of comfort. So, common management, subsidiary, etc. So, one has to review that. Keep that in mind, please. Okay. The company may have sold subsidiaries or business and may have agreed to take over and indemnify all liabilities and contingent liabilities. Just imagine, and if we miss out on this, it will be a major problem for the acquirer. Product and other liability claims, warranty. That's what I was telling you, warranty claim. How would you know? How would you know that there could be a warranty liability? Wherever there is a warranty, it is warranty provided for a product. It is absolutely necessary to make a provision. It is very important to make a provision for such warranty based on certain data, how much cost has been incurred in the past years. Estimate has to be made. May say for 100 products, 5 products, for 5 products it is always faulty, and over a period of time, on an average 5 to 10 products are faulty and has to be replaced because of the warranty clause. So the cost of the those 5 or 10 products needs to be provided for. Okay, otherwise the expenditure is not shown correctly, and 1 year they could the profit is not fairly stated. Okay, so we need to keep this in mind. Product returns, discounts, it gives you the details of these. What are the conditions under which the products can be returned? Why so much of discount is given? This should give you, it should ring a bell in our mind. Why such discount is given? It's a such hot product and you do not need discount. Why discount is given? Only when certain things are not getting sold, right? I think you are aware of this. Why products are put up on discount sale. It is because they are not going to be sold anymore at the MRP. So you please dispose it off. Whatever price you get is the, that's a benefit. At least even the cost is recovered, it's good. That's the time when discount is given. Okay, and some festival time discounts are separate thing to attract the customers, to keep their goodwills. But generally throughout the year today we see 50% discount, 70% discounts going on. That only because seasonally because especially for seasonal garments and things like that, summer is going to end, and so they know these garments, this fashion is going to be out of fashion next year, and these old products will not be sold. So better to sell it off at discount, whatever we can. Okay, so those kind of things you will always see. During winter you get the discount on summer garments, and in summer you get discount on the winter garments. Liquidated damages. What is liquidated damage? Can I have an answer? What is a liquidated damage? Yes, please. Subramaniam, you are saying provision made matching with previous experience, company QC rate and customer complaints, product nature affects legal dispute before court. Possible potential outcome against the company. Yes, very true. Very true. This has to be considered. There could be, now whether this is going to break the deal or not the deal, that is the judgment. One has to make a judgment. Alright. But you have to consider this before you make a judgment. Alright. It doesn't mean that so many things are there, we have to give a negative judgment. No, it's not viable to procure this. It's not like that. It is not like that. But one has to consider this. It could negatively impact also. You are very right, correct, Subramaniam. Okay. What is a liquidated damage? Yes, please. Penalty for any breach of contract? Yes. Breach of contract, not delivering on time. Yes, very true, Rahul. Not delivering on time. The material is not delivered on time. It is not, implemented on time. And these can have a liquidated damage clause. So these kind of things are there. And we have to incur liquidated damage. A provision is made. Many a times, a debtor balance which is outstanding for more than 10 years, you will see that those, you will try to find out and analyze, those are liquidated damage cases. They're never going to recover it, but they're still showing it as a as their asset. These are the hidden assets. No, they will never recover. That just they do not want to write it off. There are so many reasons. Balance profit and loss account will show bad figures, balance sheet will show bad figures, and employees will be questioned by the senior, if not by the board. So they try to manage and keep it. That for more than 10 years, and I got this happened very recently in one of the board meetings we were doing virtually, and we had cases where the debtors balance was lying for more than 10 years. Some cases we identify and we're telling the board that we suggest that these things should be provided for and written for write-off. And the argument they posed, the finance chief, that he said, no, marketing is making all very sincere effort. They're making sincere effort for recovery. I couldn't stop saying that if they're making sincere effort, why they can't recover? Is there a problem with the customer? I don't argue that you are not making sincere effort, but then there is a problem with the customer. So if the customer cannot pay, same logic comes, make the provision. And later on, we told them. So the board asked, what do you think? Why? So why it is lying for such long? I said, please review this. These are liquidated damage case. It will never be recovered. And they later on agreed. They said, over a period of time, we'll face it out. I said, fine, no problem. Okay, keep this in mind. Liquidated damage penalty for any breach. Yes, very good. Tax liabilities under direct or indirect taxes. Long pending sales tax assessment. No more sales tax. Nevertheless, indirect tax, because it's there in your study material. Pending final assessment of, sales tax assessments are still there. I'm sorry, I withdraw my statement. All sales tax assessments are still there. Okay, so one has to take into consideration that. Also, agreement to buy back shares sold at a stated price. Very important thing. Liability, that such commitment is there at a committed price, at a stated price, and the market price is much below that. Okay, future lease liabilities, environmental problems, claims, third party claims. Environmental problems is actually environment. Carbon credit. The penalties for too much of carbon emission and getting carbon credit. Environmental audit is taken up by chartered accountants too. We are capable to do so. Okay. So environmental is that also how much, toxic gas one is emitting, how that is being taken care of. All right. So it is because it is damaging. It is not only damaging the environment, but it is damaging the people. That's more important. You're damaging the people's health and of course damaging the environment. That's a greater cause. So carbon credit is made available. Those who are, doing good as far as the environment is concerned. And general environmental liabilities like problem with the people. You're not dealing with your employee properly, and hence there are probably cases going on by employee cases could be there, harassment, this, that, whatever, whole lot of things. Third party claims are there from customers, from the vendors. This is there. Unfunded gratuity, superannuation, leave salary. Unfunded. They are making provision. Very funny thing. If you read the balance sheet of such companies, they are making the provision. Provision is only increasing. Where they are not making payment. That means it is unfunded. You are making a provision just to show on the face of the balance sheet and the profit and loss account that you are making a provision for gratuity. But are you having the fund? Where is the fund? Where is the fund? Unfunded gratuity liability. That means what is mean? That if a purchaser acquires such, one day the liability will come. Suppose some employee is retiring. You have to pay gratuity. There is no fund. So as a statutory auditor also we check that. Statutory auditor, internal auditor, it is important to see whether the provision that you are making, how much funding you have done. Okay. We take many banks today provide this service of maintaining the gratuity fund. All you have to do, get a certificate from them and see statement. You go through the statement, not only the certificate, you go through the statement and see when the last funding was done and where from that fund has come. So these are important, Superannuation, leave salary liabilities, those kind of things. Well, incorrect gratuity valuations, labor claims under negotiation. They have not modified. They are not. They have not. They are not as per the labor rules. They are not making payment as per the labor law. And claim has been, somebody has complained. So there is a case going on with the labor authority, and on the top of it, they say that if you want to continue with the factory, you make the changes immediately. See, it's both way. So there is a case going on, and if they do not, if they wish to contest, again, I'm giving you a practical experience. There is for this particular organization, they are into chemical business. So which one of the residual output from there is some liquid gas. It gets generates some liquid gas, and so one has to how to release that liquid gas. They are just doing through the normal drain, and it was getting mixed up in that particular small town. It got mixed up with the drainage system along with the drinking water system, and immediately people fell ill, and there was a case imposed not only by the by the environment authority, and some other cases from the citizen also. So this particular company, they have a NRI management. They said, we will contest the case. So the local management said that, okay sir, we will contest the case, but let's first do the things what we should have done. There is a problem with us, but we have to correct our case. Otherwise, what will they do if we do not make the payment? The authority said, you make the payment. You make the payment so that they can correct the drainage system. That payment, that expenses you have to bear because you have contaminated it. So you please make the payment so that we can, purify the system again. And so the local management told the NRI management that, okay, we can contest the case, but please let's make the payment. Some payment let's make so that our factory is not shut down. Okay. So these kind of things one has to deal with. Rahul has a question, whether due diligence is covered under clause 12 part 1 first schedule or clause 2. Due diligence is clause 12 is signing. Yes. Clause 12 is signing. And part 2 and second clause 2 part 1 second schedule. It is all there. It is all part of it. If we are signing it, these are all part of any it will come under misconduct if you are not dealing with these things properly. Okay, where we are attesting whether it is a assurance job or a non-assurance job. This is a non-assurance job. Okay. Risk overvalued assets. So what is the hidden problem with the asset is that they are overvalued. Uncollected, uncollectible, obsolete, slow moving inventories. You are holding, as I said, they are obsolete, perishable items. You are still showing it in the books and records. Why do we do a physical inventory verification? Simple to see that whether that material is actually there or not, that item is there or not. So that's very important, whether valued above the net realizable value. So you cannot continue to hold the stock at that value. You can continue to hold the stock only at the net realizable value. All right. If you can prove that this is the net realizable value at the in the market. Otherwise, it has to be written off. Perishable item, nobody will buy. Even if you throw it away, even probably the dogs will not eat it. So what is the NRV? So it has to be thrown and written off from the books of accounts. Okay. Underused or obsolete plant and machinery. I've been telling you. I think I have explained this a lot. Spares. Whether they have adequate spares or not. Probably they have too much of spares. We have to maintain the mandatory spares which are required by the insurance. The insurance defines that these are the spare you must keep whether you need it or not. Right? But if you see the component of the inventory, cost of spare is huge. So we need to, review from year to year, month to month basis, how much spare is actually used. All right. If preventive maintenance are done, may not be used so much unless and until it is required statutorily, like for the insurance. Whether use it or not, it has to be there. Okay. and asset value which have been impaired due to sudden fall in the market value. Okay, it could be because of that the cost has come down, so net realizable value is very less, and you can't carry it at a original cost. Assets carried at much more than current value due to capitalization of expenditure. Yes, that's possible. I do not want to show. If I show it as a revenue expenditure, my profit and loss account is, I'm not getting the desired figure, desired profit. So what to do? Which expenditure not to show? Let's capitalize revenue expenditure. This happens. So, one has to be very careful about that. Foreign exchange fluctuation, capitalization of expenditure mainly, that are in nature of the revenue. Litigated assets and property, very, very critical. The factory, there are a lot of, that's why I said encumbrances which you have on the property. Other court cases, some court cases going on, that's also an asset, right? Property is also an asset. Okay, is any court case going on? Those kind of things one has to keep in mind. Accidents, if any accident has happened in the liability, if any accident has happened, is there any liability for the employee? Is court case going on for the such employee? Many times we see gratuity has not been paid, leave salary has not been paid to employee who has retired, and we ask questions, why is not picking up? He said some court cases going on. Okay, so answering the pertinent questions are very, very important in due diligence. Okay. Investment carried at cost, though realizable value is much lower. Okay. Investment carrying a very low rate of income and return. No point. Keeping idle cash. Idle cash you are keeping unnecessarily. Infructuous project expenditure which is unviable, but you continue to keep spending on that project which is not going to come up. And deferred revenue expenditure, that's deferring, that has to be written off over a period of time. We are just deferring it and capitalizing it as capital work in progress. We are not showing it in profit and loss account, neither by way of expenditure nor by way of depreciation also, because there is no capital. All right, and intangibles of no value. Okay, cost intangible asset having no value, can't show it with a value in the asset. So we can, you have examples of that. Fixed assets which are carried at ₹1. They are carried at ₹1. Okay, because the asset is there. There are two things here. The physical asset. Physical asset has not been disposed of. Physically, if you are using some asset, it has to be carried in the books of accounts. It must be there in the fixed asset register. But at what value? But at what value you are going to carry it? That's more important, right? So you can generally, you carry it at ₹1. But they remain in the fixed asset because the physical part is very important also. Otherwise, you never know who has taken it. That also happens. There is no clue. There is no clue where that asset is. In large government, departments and things like that, it happens. Cash flow is important. Okay. I think I have already explained. So that's all about the due diligence. Thank you, Rahul. So that's all about the due diligence. Small chapter, important chapter for understanding and also for exam purpose. So the important point to remember is they don't get confused between the due diligence and investigation, right? We'll start with investigation now. The chapter on investigation. Not to get confused with the due diligence and investigation. Due diligence is done on behest of the investor who wants to invest in some acquisition, or for a bank who wants to again invest in the form of a loan, right? So it is done for that. An investigation could be anything else. Something has gone wrong, authority is feeling that there is something wrong with this company from the balance sheet that has been submitted, from the market news that's going on, and or some complaint has been made by somebody, And based on that, an investigation can start. Okay, investigation can start. So due diligence is before a deal is made. Investigation can happen after an incident has already happened, and to identify what is the impact, what best can be done to save the situation from further problems, negative impact on the business, on the economy as a whole, on the people. Investigation is carried out. And let's look into that. Investigation implies. So what does investigation implies? Definition. Investigation implies a systematic and in-depth examination or inquiry to establish a fact or to evaluate a specific situation. It means inquiry into the facts. Okay. Due diligence also means inquiry into the facts, but for a purpose. Purpose is different. Many of you initially you are getting a little confused. So it is both an inquiring into the facts. Purpose is different. Again, difference between the investigation and audit. We will continue with investigation in the next class also, where we will be talking about due diligence as well. I'm sorry, talking about the forensic as well. Okay, so the investigation is difference between the investigation and audit. And investigation aims at establishing a fact or happening or assessing a particular situation. So something has happened, and we are trying to find out what happened behind it so that this situation has occurred. All right. Audit is to, again, we are expressing or giving our opinion on the financial statements. Okay. To give our opinion on the true and fair value of the view of the state of affairs and working results of an entity. Completely different, very, very different. Scope of investigation will vary from investigation to investigation. So scope has to be different. Okay, there is no first and, for each assignment, the scope can be very different. But the scope of audit is generally guided by the statute, right? And investigation can be statutory requirement also, non-statutory requirement also. Where it is statutory requirement, guidelines will be there. For non-statutory requirement, it has to be very clearly defined. Otherwise, a person doing the investigation will end up in trouble, So there will be a gap between the expectation and the delivery and the result. Expectation and the result. So one has to be very careful. Periodicity. Audit is carried out periodically as per the statute, yearly basis, quarterly basis for listed companies, and investigation is not generally like that. It is based on a situation that could have happened, and it is not limited by any rigid time frame. It may cover several years. Yes, they wait. Sometimes they wait. Investigation can be such, if you have somebody has stolen money, so the authority probably know that somebody has stolen money. Can you go and catch the person concerned and bring it to the court of justice? No, we can't. We have to wait. And there are so many such examples in front of us today, where, we have to investigation wait and before they get the desired output, desired result. But one has to work towards that, because it can involve international boundaries also, and not so easy. So it takes time. Some cases it could be easy, some cases, complicated cases, could be very complicated naturally, and one has to wait for years to get the desired result. But result does come if it is done diligently. Nature is completely different between the two, requires a detailed study and examination of the fact and figures. And audit, test checking or sample technique to draw evidence to form an opinion. Inherent limitations. Audit has inherent limitations, like audit risk we carry. some audit risk, we always carry residual risk, and we live with that. But there is no such inherent limitation as such in case of investigation, because you have a clear guideline, or a clear scope of task that we have to do. So inherent such things are not there. Maybe some example you can give where it is inherent, where it involves international boundaries, and we do not have such diplomatic relationship with such foreign country, and probably the data that we need or people involved that we need to bring them back is not possible. So that could be an inherent limitation, but generally it is not. Evidence, it seeks conclusive evidence. Okay, we seek always conclusive evidence before we pass a judgment, and audit is based on the prima facie evidence. Observance of accounting principles, it is analytical in nature and requires a thorough mind capable of observing, collecting and evaluating facts and figures. Very important thing, and it is governed, in case of audit, it is governed by compliance. Reporting, outcome is report to the person on whose behalf the investigation is carried out. It could be, individual company, individual person, it could be authority, whoever it is. You could be doing it for a bank, you could be doing it for a company, it could be done for any government authority, it could be done for police, whatever it is. Okay, and so we know whom to report it to, and we report accordingly. An outcome is reported to the owners of the business entity, and for listed companies we know where we have to report. So these are some of the differences between an audit and investigation for you to remember for your exam purpose. It's very simple. Steps in doing the investigation. We first and foremost, absolutely important to, do the scoping. What is the scope of investigation? We can go very wrong from the beginning if we don't have the scope set right. Scope has to be very, very clearly set right. So, scoping is important. What we have to do. Formulation of the investigation program. As I said, that we may not be an expert always. We may not be always an expert. Alright. Whether we need some other expert to be part of our team. So that's what a program needs to be carried out. You just got an assignment, you accept it and start doing the work. It doesn't work like that. We have to plan it. Like any audit that we were discussing so long, that we need to make a plan. We need to make a plan here also. Because we need to identify the resource. If you see that, well, you can do all alone yourself, no problem, do it, go ahead and do it. But if you see that, no, you need, some legal expert, you do not know, some cyber crime has been involved. Cyber crime is involved. You may not be knowing, so probably you need a help of the cyber specialist. All right. Something has happened, some sabotage has happened on the plant and machinery, the plant and machinery is not working. So it is possible the client is saying that there has been a sabotage. Somebody intentionally did it. Now we don't know. So we have to take an expert opinion on that also. So we have to understand, formulate an investigation program. And then we start the examination and study of various records by reference to the appropriate evidence. Evidence must be there, and evidence has to be taken, keep in file, whatever way. Soft copy, hard copy, better to keep digitized today, because the hard copy doesn't stay for long, especially if you're taking photocopies. These are things which you're aware of, but we tend to forget, when we go in practice actually. So for your exam purpose, you also remember, if such question comes, which, always it is better to have a digitized copy. I shouldn't say a soft copy. It should be better to have a digitized copy, copy of the evidence, because a photocopy, a hard copy, you may not know. You may lose it. You may, one day to 2 months later, you open it, it has become a white paper. Right? It has become a white paper. It is no more an evidence. Just imagine what can go wrong. You can say that even the soft copy you can lose. Yes. Soft copy you can lose, as you can lose the hard copy also, but you have to have the means and ways of safekeeping that soft copy. But the longevity of the soft copy is definitely much, much higher than the hard copy. So digitization is important. Today you see in our country, land records, everything, all are digitized. All right. So the evidence. How do you look into the evidence? How do you record the evidence and maintain the evidence is very important. Evidence, when we are talking of the evidence, reviewing with reference to the evidence that you are looking into the records, you have to be careful. What are you looking at? Hard copy, soft copy, some mails. They produce you some mails from you. That mail may not be a very coming from the good source. Why people insist on having a official email IDs? Why not from unofficial like Gmail? We tend to use it, but it is always good. Professional email ID should be used. So those kind of things should be kept in mind. So when we accept evidence, we have to ensure that we accept in that format. Otherwise, it may not be. Why I'm saying so? Because these are not tenable in the court of law. Because because you have to also represent, maybe you have to also represent the client, that on what basis you have come across such a conclusion. The other party may challenge you in the court of law. So to produce your evidence, we have to ensure the source of evidence is very important. You may not always the photocopy is always not is not tenable. You may not get but you say that what do I do? They will give you me the actual copy. No, they will not. But we will get it signed and stamped and signed by them on the physical copy. Okay, that's what we should do. That will be tenable in the court of law. So we have to know our ground rules in any audit, in that matter, and investigation, of course, especially. Since I got an opportunity to talk about this, I'm saying analysis, processing, and interpretation of findings. Once you gather the evidence, once you gather the evidence, then you sit with the evidence. Then you sit with the evidence and then you go through it to come to the conclusion of the investigation. So then we start linking, then our actual knowledge, experience and skill comes to play. Gathering the information and then sit down and analyzing, mapping with each other, with each evidence, with other evidence to come to a conclusive evidence. You remember? Conclusive evidence and then we give a conclusive report with the evidence that this is our report on the investigation, preparation of report and drawing up the conclusions. The report should contain objectives before, okay. So objectives, I think it is clear, they are not much to say. I have, okay. Okay, we will go with an example for such investigation, okay. So let's take the example of, let's come here. Suppose there is a, investigation. It will be easier for you to assimilate and understand also if we take an example. Let's take the example of payroll. The company suspected some foul play in the payroll payment. They are saying that they feel that the payroll cost per month is too high. There is some problem there. The management, senior management, they get MIS, right? They get every month, they get an MIS and they get a figure. That this is the payroll expenditure, payroll expense. And it is a retail business. Dispersed all across the country, huge number of staffs. So they say that whatever it is, we feel that the payment of wages or salary is little high. And we need an investigation. We need a separate investigation. Audit, let the audit go. Let that happen. We don't have anything to say. But parallelly, we want to have an investigation into this particular system. So it appoints somebody, an investigator. It could be a member. We'll come to that later. Who can be the investigator? So a member can be an investigator, not the firm. Okay, a member can be an investigator. So he contracts a member of the firm to do the investigation. So what you see when you do the, formulate the program, what will you do? So we will basically understand, what are these component of salary has come from where all. So this planning we will make. This is the planning. So scope, we are very clear what they have said. Then we formulate the investigation program. So we will formulate. So we will understand the salary payment process. We will understand the salary payment process of gathering attendance, from where all it is coming, how many locations, how many employees per location, and over a period of time, if the client says that you will be investigating for a period of 12 months, we have to essentially take attendance recording system, data, recorded data for 12 months, number of head count of all the 12 months separately, joinees, those who have left. These reconciliation should be there for each and every month. So do you understand why it takes time? In an audit, we do not do that. We do not do that. Maximum we do a analytical and we do an analytical check, verification kind of things we do. We analyze from month to month, year to year, how much is the difference in salary, and we have an idea. We make an idea that it is prima facie, it looks to be correct, but they have a feeling that there could be something wrong. So they are giving you specific requirement. So we prepare this way. We prepare a program and then we collect the evidence. So we prepare the program and then we are collecting the evidence that you please share with us attendance of all the locations, location wise, staff wise, attendance. Second is that you give us a list of staffs, location wise, and with a reconciliation. How much was there in the previous month? How many new joinees are there? How many left? And what is the closing figure? Okay. Rate at which payments are made. Rate may not be the same. A store manager will have a different rate than the housekeeping staffs. So all these, so you see, so detail we have to plan, and then only we can collect the data properly in detail. And it is, as I told you before also, it is not good to go back to the client time and again. As much as possible, we will try to gather in one go. Of course, if there are gaps, if we can identify there as errors, we will go back. We will have to go back. All right. But the fact that we get it as fast as we can and in one shot, right? So after that, we gather that collect that evidence, and once we collect that evidence, then you start analyzing. That, okay, in this particular store, there are so many staffs and the rate is so much. Just a simple calculation probably on Excel sheet. Okay, in Excel sheet, and you come across, you will get the figures. Why attendance is required? The payment is based on attendance and the contract. Maybe the store manager, he doesn't have to be present, but he is paid for 30 days. But for other staffs, it is, work and pay. That only when somebody is present, he will be getting paid. So there, the attendance is important. And also, they get overtime if they are there for more than certain amount of time, right? Maybe it's some of the stores of this particular organization, they're open throughout the night. 24-hour, 24/7, they are open. So naturally, one person is not working, there is a replacement. Otherwise, they will be violating the law. So for one particular work, 2 staffs are there. So how much time he is being paid for? If one person has not come, did the previous, the other person in the other, during the daytime who was working, and the night shift he didn't come, or the evening shift he didn't come, the person who came in the morning shift, he was asked to continue. So he will get paid at a higher rate. So all these needs to be calculated, and with evidence, not prima facie, with evidence, by looking into the attendance management system, the data which is there, attendance recording system. Okay. So, and if it is planned in proper way, if the evidence is collected in properly, and then if you put it in, this way in some Excel, or for this example I'm saying, it will be easier, you see, and you just keep on continuing with this for the other stores also. You will see what is the actual payment. Actual payment ideally should have been, and then vis-a-vis actual payment that has been made. It could be a small investigation job, which is much easier. Okay. So that, but one has to do it properly to get the desired result and conclusion. Okay. So to analyze that's analysis, and then we come to the report. So the report should not contain anything which is not relevant, either to highlight the, highlight the nature of the investigation or the final outcome. Therefore, we should not be talking about, extra things. We should stick to the our scope of work and to the point. Okay. Every word or expression used should be properly considered so that the possibility of arriving at a different meaning or interpretation other than the one intended by the investigator can be minimized. Very, very important. Here we do not have a clear guidelines about the report. Okay, like in case of statutory audit where reporting formats are provided to you. You can't go beyond that. But here we are putting our own language. So language is very important. It should not be so harsh, or it should not be so timid, and at the same time it should not be such that there are scope for different type of interpretations. It should be straightforward. Okay, it has only one meaning. Your word has only one meaning. It should not be ambiguous. It should not be ambiguous. All right, it should be clear and straightforward, having one meaning. Relevant facts and conclusion should be properly linked. We should not be subject to, we should not give inconclusive and roundabout conclusion. No, we have to be, that means we are not very sure. We are not very sure. We couldn't come to the conclusion properly. We can't do that. It has to be a conclusive, clearly understandable conclusion with linked conclusive evidences. All right. That why we are giving such conclusion, because immediately it will be countered. Immediately it will be countered. All right. So you have to be present with your evidences, and for each point there could be, you say 10 points against this. So each point somebody for this example, somebody may say, no, the attendance data that you are looking at, it is wrong. You said, how could it be wrong? I have this evidence. Can you? And it is signed by you. It has come from your official email. So how can you now say, and I have worked on it? I have worked on it, and how can you now say that it is incorrect? So that kind of linking with a evident point, an issue has to be made. So it has to be a very big report. Many a times it runs to pages because of this information is required. Based on assumptions, basis and assumptions should be explicitly stated. Many a times we have to make some assumptions. All right. So if we do not have any conclusive evidence, and one has to be, if you are making such assumptions and bases, it has to be very clearly stated so that the other party understands it, and you have your back safe. Reasonableness of the basis and assumptions must be made. You are making, an investigation is not an investigation, if it is based on only assumptions. That cannot be an investigation, anything but an investigation. All right. So it cannot be only based on assumptions. That's important. For example, if in an investigation into overstocking of raw materials, inventories and spares, etc., it should not be assumed that the ordering level indicated on bin cards provide a fair guidance about acquisition of other materials. All right. Why we say make such assumption? Okay. So we can make, we may not make. All right. You have to, both way you have to think. You may say that, okay, the reordering level has been mentioned there. The reordering level is mentioned there. So based on that reordering level, new purchase order or requisition is generated. It could be accepted, it may not be accepted. If you do not accept that, you have to give your justification for not accepting. One justification could be that how often this reorder level is reviewed. You probably, from the very, very nature of writing, from the writing you can make out probably it is written several years back. It can be, you can make out from the, writing on the bin card, if it's a physical bin card and kept on the bin, then it is probably 10 years back it was written, and the reorder level is continuing like that. If you probably you see that material is not used anymore. Machine has changed, that store is not used. But because it is written like that, and one person is there whom it has been told that you please make a round once a month and find out, take an inventory, check the inventory, count the inventory, and also check the inventory level as per the bin. If you see it is less than that, please come and give me a requisition. Then you may not you are not making a good assumption on that. But if you see that they very often, they review the reorder level and then write it there, probably it is. And then you will, in most of the cases, you will see these are not done these days. These are all automated. So we resort to automation. Probably it will be good to see that they have an ERP system where they are maintaining a reorder level. Check that these two reorder level, are they same? The reorder level mentioned in the bin and the reorder level mentioned in the system, are they same? They are not same. You identify that they are not same. Then you find out on what basis they are making the requisition. Are they making the requisition based on the physical, the reorder level mentioned in the physical bin or in the system? So you see, there can be, I mean, we can speak for hours probably on this, okay? So one has to be careful about these things for your exam purpose. Since an investigation is a fact-finding assignment, assumptions should be made only when it is an unavoidable. Keep this in mind for your exam purpose, my dear students. Keep this in mind. In investigation, it should be only based on conclusive evidence. Only when there is no evidence, we can make some assumptions, but that has to be supported by, facts. This is the reason why I am resorting to, some assumptions. Because you have to tell them that I couldn't get any other evidence, so I'm relying on such, assumptions. Report should clearly spell out the nature and objective of the assignment expected in its scope and limitations, if any. Report should be made in paragraph form and with headings. Okay, these are usual. The report should also state restrictions or limitations. If we came across, we were not allowed to go to some places. We said that we also want to, taking this example, we said no, we want to visit one store and want to see how the attendance recording system is getting collected and how that is getting transferred to the payroll system. Okay, they said, no, you can't go to that store. We will not allow you. Whatever you do it from in our office. You are not allowed in the store. So we have to keep that in the report also, that we could not, that was the restriction, that we could not go. But if you cannot make a conclusion because you could not visit, then that should be brought to the notice immediately. Because then you are not doing your job correctly. Then there is no investigation. All right. So at the end of the job, if we give a report that we could not give you a conclusion because we were not allowed, then what is the point? The client may say we will not pay you. So you have to judge that how much limitations is acceptable, how much restrictions will not impact negatively on the conclusions that you make, right? So these are small things. Keep that in mind for exam purpose. Preferably the reasons for placing such restrictions and their impact on the final report should be stated. That's what I just said. Opinion on the investigator should appear in the final paragraph. The main paragraph. And then we have detailed schedules, supportings, etc. But the main report should give the opinion in clear, unambiguous wordings. Some special issues. What are the special issues? Whether an investigator, whether we have to do a 100% verification approach. Yes, probably. Unlike in audit, where we can do sampling, test of controls and all, here investigation, depending upon the situation, probably, and how the analysis is going on, probably you have to do 100% verification. Okay, depends. Exact situation on the investigation. Whether the investigator can put reliance on the already audited statement of account. Again, not completely. He can take some clue from there, but he cannot completely rely on that to give his conclusion. Then there was no need for this investigation, isn't it? So there was no need for this investigation in that case. So he cannot completely rely on that, but he can take some facts and figures, some clues from the annual report, definitely. Whether an investigator necessarily requires assistance of expert, again depends on the situation. As I said, if it is, say for example, if it is related to some cyber crime, if it is related to some plant and machinery that has been damaged and you really don't know how this has happened. You cannot find out what could be the replacement cost and things like that. Probably whether they are beyond repair. Replacement cost is what? I mean, we do not know whether it has become completely obsolete or it can undergo some, some repair and repairs, and then it can be brought back to life again. So we are not the right person to decide on that. So probably we have to get some expert. Again, depends on, it is not a clear cut yes or no answer. Please remember, whenever, if you are answering a theoretical question, please remember you must include this statement that it depends on the situation. Don't just write that yes, it needs a expert opinion other than the investigator, or don't say that no, it doesn't require, we can do it. No, it's not like that. So always start with this, that it is it depends on the situation. And my dear students, for theoretical papers, I'm sure other facilitators, faculties are also telling you it will be very good. You will be scoring very high if you can give examples. If you can give example, it will be very, because the moment you give examples, the person who's actually reading your answer paper, he or she will know this fellow knows. Practically he knows. Its audit is not only, this paper is not only testing your theoretical knowledge, it is also testing your practical knowledge. Practical knowledge that you have gone through the rigorous process of 3 years articleship. All right, how much you have gained from that, that is also testing. So if you can give, an example, take small example from payroll, wherever you are comfortable. When you read this, please start writing these examples. It will be easier for you to remember and easier for you to answer. I always tell my students that you go by examples. You always go by examples when you are reading. You are reading a theory, please note down an example. You will see you don't have to read it more than twice probably. Okay, you just give one more a revision. And it is not, people keep on saying we can't memorize, it's so difficult. You don't have to memorize. Apply your knowledge, apply your experience in this, and the theory will be easier for you to remember. Okay, whether the investigator can, necessarily require assistance of expert, investigation out of dispute or conflicting claims possible, and basis of the opinion of an investor, whether an investigator can make futuristic statements. Futuristic statements can I make? Okay. So depends again on the scope of the work. It all depends on the scope of the work. So we should start writing that if it is within the scope of the work, that you have to also comment on the future of this, case. Yes, of course you have to. Of course you have to. Some litigation is going on. So they may ask you this within the scope. You please tell us that what is according to you, how much time do you think it will take to get an opinion from the tribunal or whatever court the case is going on. So if it is possible for you to give. If you have to bring in an expert to, go through the evidences and give an opinion, you should give with again subject to clause, that if all these things follow in process, if the client goes there and, show their papers, if the, investigating authority who's actually with whom the case is pending, they are there on time, then it is possible. Otherwise, you cannot. So it is again, with lot of subject to that you can give some futuristic statements, provided it is part of the scope of the work. First thing, whether to retain the working papers or not. Absolutely important to retain the working papers. They might tell you that you cannot keep the working papers because this is investigative in nature and police's case is going on or whatever. So you have to decide beforehand whether you are going to take that job or not, because if they are not allowing to keep papers with you, how will you prove your point later on if you have to represent yourself or represent the case? So it is very important to keep the papers. All right. Some do you have questions? I haven't gone to question. No more question? Okay, no question on investigation. If you have any question, please post it here, students. Okay. If not, we can move forward. Yes. So we will, a business investigation. Suppose, business investigation could be like that. Why the profit is going down? In spite of having good market share, and the stores are running, people are good, nobody is leaving the organization, products are there, customers are not complaining about the products or the service. Still, in spite of that, why the profit is going down? This could be a nature of reason for investigation. Never know. All right. So if such case is there, so we need to, how do we start business investigation? We start with the overall picture. We document it. We document the overall picture, and keeping on focus the overall requirements, the scope of audit. We should not be out of focus of that. Statement of profit and loss account, and look into the details, because profit going down means we have to look into the financials, where things are going. Probably expenditures have gone up, some unattended, some uncontrolled, unscheduled expenditures are happening over a period of time, or it could be some fraud is happening. We will move into fraud, investigation. We will slowly move into fraud. Something is going on into that line. So we need you're having loss of less profit. What could be the reason? Cost of procurement is high. Sales is high, fine, sales is going up, but the cost of procurement is also going up. So it is the company might have added a new line of business, because of which the turnover is going up, but the cost is also going up faster. Okay, in proportion to the revenue, it is going much higher and faster, and hence the profit could be coming down. That could be possible. It could be because of the wage structure, and things like that. The depreciation rate is high. Wear and tear expense, because the plant and machineries are so old, almost obsolete, and repair is too often. The cost of repair is very high. All right, that could be one of the reason. Or initially, because the depreciation rate is high, because of the cost, because of that, it could be going down. So one has to see whether it is a cash loss or after applying depreciation and all. Okay, if there is a cash loss, so we have to identify that way. If there is a cash loss, so then we start looking into the reason for a cash loss. If it is not so, then look into the other side of it, other part of it. Managerial remuneration, the sales have not gone up. The cost is quite high, including the remuneration of the managerial remuneration is very high. Is it as per the market, or they are paying more than that? Whole lot of, these are the areas. I don't have to tell you the details, exceptional and non-recurring items. One of the areas probably where you get into see other expenditure. Okay, miscellaneous expenditure, other expenditure head, and see what are the components of other expenditure, what are those. Okay, and try to identify what nature of transactions are passed through them. Okay, maybe some are not correctly accounted for. Okay, it is a cost of repair, but they have put it in the other cost to show the cost of repair is okay in compared to the other years, past years expenditure on repair. They have accounted for in other expenses. Okay, so we might have to, this is the reason why I say probably we have to check each and every transaction depending upon the situation. Exceptional and non-recurring items we need to see. Okay. Claims materialized and payment is being made. So maybe it is, one could be the reason, one of the reasons. Unusual year. Like this year, 2021. I don't think anyone should make any assumptions or any plan based on the facts and figures of 2021. If somebody is claiming, that we will maintain our business, and you do a due diligence, you do a investigation, whatever, so may not be correct. So it could be the fall in the profit is because of the unusual year, the situation like this as we are going through. Okay, could be competition has come in. It could be unusual transactions, could be too much of competition, and you're advertising a lot for your product which was not there previously. All right, so these sort of things, very very important thing. Advertisement cost of advertisement, because there is no monopoly these days. So how much do you advertise, right? The company, how much do they advertise to retain the market share? Those kind of things, because the cost of expenditure is high. Our companies use public figures for advertisement, and it's very expensive. Repair and maintenance. Okay, I have not taken everything here. Yeah, repair and maintenance, as I said, an unusual year. Okay, too much of fluctuation in the economy. It doesn't necessarily have to be, Indian economy or only a world economy, which will have impact in our country. And we have seen, there have been many such instances, and currently we are going through such an instance. To keep that in mind. Then comes this is the profit and loss account, the balance sheet. We need to review again the fixed assets, the investments, the inventories, trade receivables, idle assets, liabilities. Okay, what we need to see in the fixed assets? We do not show the age of the asset. All right, we show in the financial statement, what we show is the asset and the depreciation, right? Value of the asset and the value of the depreciation. Even in the detailed schedule, age is not there. It is just one line per type of asset. Okay, but if you are investigating, because you see these are all interrelated, age of the asset is such that because of that reason, the cost of the repair is high. Because because this is an investigation job, we cannot say that your repair cost is high, that's why your profit is less. You cannot give such a conclusion. You have to prove why the repair and maintenance cost is high. You think it is high. Okay, then you have to come to the asset. It is high because there could be two reasons. One is that the machines are obsolete, almost obsolete. Okay, they are very old. They have already, seen the day of their life. So repair and maintenance is high. That's one. Or it could be so that they are relatively new. They are not old. They are not obsolete at all. But there is no preventive maintenance. If you do not take care of a machine, practically, if you are not taking care of your own laptops, it will not run properly up for the expected period of time. Just because it's a machine doesn't mean it will run. No. Okay, it happens in your own house also. You have to maintain systems. We do preventive maintenance. Similarly, for the organizations, if they do not have preventive maintenance program within the company, there is a risk. There is a risk that the machines when fail, the cost of bringing them back to life will be enormous. Why companies, they do not want to make such preventive maintenance program? They said, why should we unnecessarily pay when we know that it will not fail? God knows where from they had made such assumptions that it will not fail. All right. So, but they said, no, we will see when it comes. Because of, it's kind of like a penny wise, pound foolish. It's kind of an insurance. Why we make an insurance? Because with surety we can say that we will never fall ill? We can never say that, but we take an insurance. We may never fall ill, but we still have an insurance, right? It's like that. It's an insurance for machines. Insurance is not taken for the fixed assets. Okay? Preventive maintenance program is not there for fixed assets. So, a particular year or over a particular period of year, the cost of repair is so high that they had to incur a loss. And they spread it. They didn't, and probably when through your investigation, you will see that the cost of repair would be higher. They have not reported it fully. They spread it over a period of, say, 2 years, because they cannot absorb the full expenditure. It can be done. Means it's just an accounting entry. You know, you keep it in, park it in an asset side, and then you write off over a period of year. Right? It's just an accounting entry. So as you investigate, you find out. Okay? So that's the fixed assets that we do not know the age, and because of such a reason, it could have failed to perform or work. Investments. Whether the investments are giving the correct return. Alright? Or they have invested in places where they are not getting return at all. Alright? So those kind of things one has to review. Where investment, income from investment is a reason for such loss, which generally should not be. This is an indirect income. But nevertheless, if it's an investment, some banker, for them it is the main source of business. One has to see that. Inventory. Are you having idle inventories? You keep the example which I gave you. Because the reorder level is there, whether it is computerized or not, they are keeping on purchasing inventories and accumulating. Nobody is bothered to see whether that product is actually required or not. Before making any requisition for new purchase, one has to see how often that is used. It is a regular item. Yes, if it is a regular item, it has to be purchased. If it's not so, is it an insurance item? Yes, if it is an insurance part, it has to be purchased. If it is neither of the two, one has to review why we need to purchase. Okay, so an investigation will throw light on this. Inventories. Trade receivables. Again, I gave you examples during due diligence also, and this, that it's lying for ages. It could be that work has not been completed. There can be so many reasons why trade receivables are lying. Work has not been commissioned. It is because of the liquidated damage. The customer is out of business. There is no trace. They have wind up their business. So many reasons it could be. And trade receivables we are still carrying in our books. Okay, or those kind of things one has to look into. Idle assets. Unnecessarily keeping cash in hand. Why should we keep cash? It should be in the bank. Cash doesn't generate any income. Idle cash will not generate income. If it is kept in the, if it is kept in the bank for investment, even if it is kept in the bank for, current account, it also will not generate any interest of what's speaking. So it should be properly managed. It needs to be investigated that whether they have adequate idle cash. In spite of having idle cash lying in the bank, probably it doesn't have to be hard cash. It could be lying in current account, and in spite of that fact, they are still borrowing from some other bank. Cash credit is going on. I mean, why would they do that? You just imagine, because of that interest payment. Many a times, because of the interest payment, the profit comes down. If not, the one incurs loss because of the interest payment. So one has to know why we are incurring such interest costs when we have reasonable cash to continue our business from our internal fund. Many idle assets I have seen, during the when excise duty was there, or now GST. ITC is not completely claimed. Let's talk about ITC only. We'll not go to excise duty. Input tax credit. Input tax credit is not taken. Input tax credit is lying. So input tax credit will be utilized to arrive at the final payable, right? Companies are not taking it. So that's an idle asset. Who told you to keep that? There is no bar. If you can 100% use it, somebody says that no, we want to keep it. But how much you want to keep it and why you want to keep it? Okay? So one has to have good reason to, explain that why you can't keep it. And many times you see that if it is more than certain, period, more than 6 months or 12 months, they cannot claim the credit. So if it is not monitored properly, you see what loss they will make. Okay? So these kind of things one has to review. And of course the liabilities. What liabilities are there? Some claims have been materialized for which they have to make provision for payment, immediate future payment, and because of that reason the profit has come down. It could be one of such reasons also. Okay? Taxation, I didn't write, taxation, capital, and things like that. Okay? Let's come to this. Type of investigation. Type of investigation. I will just explain this before we wind up today. We still have some time. Do you have any question? No question. One question. Madam, your class is not online class. And you are sharing. Oh, thank you. Thank you, Subramaniam. Thank you so much. I also would love to have see students face to face. This is my first, first time I'm doing such virtual classes. Even I am not liking it, but again, it is for your benefit. So if I can make any benefit, any impact, positive impact for your studies, I'm very grateful. Okay, I'm also used to only online, face-to-face classes, not online classes, face-to-face classes, and it is so much more enjoyable, so much more interactive. Okay. Thank you. Type of investigation. So slowly from here we will move on to the fraud part of it. Okay, we'll take it up next class, day after tomorrow. So what type of, for the time being, what type of investigation? Statutory and non-statutory. Statutory investigation is like which is given by the statute. So there are certain statute like our the Companies Act. So and it is done by inspector. Here we never talk about an auditor. Remember, we always use the word inspector. So by mistake also don't write, in your exam auditor. Like as I am speaking so many times, the auditor is coming, but I am controlling myself. So make sure that it is always done by the inspector. A member of the institute can be an inspector. Okay, that much, but we are not an auditor here. Investigation into the affair. There are two things. Please remember this. This chart is very important for question answer. You have to remember this. Okay, so one is statutory, one is non-statutory. In statutory, there are two parts of it. One is you are looking into the affairs of the company. Affairs of the company. And in another, you are looking into the ownership of the company. Very two distinct types. Okay, please remember this. Okay, for your theory paper also, as well as for your MCQs. This could be a, difference between thin line, difference between getting it wrong and right. So affairs looking into the investigating into the affairs of the company is guided by section 210, section 212 and section 213. Okay. So section 210 talks about an order from the central government. Talks about the order from the central government. I have detailed slides on that. I would like to touch upon that. So it is the order from the central government under section 210, and in case of 212 it is by the Serious Fraud Investigation Office. It is also a central government department, but it is called the SFIO, that the Serious Fraud Investigation Office. They can also ask for some investigation and is under section 212 of Companies Act, and other cases it's 213. And this is into the affairs of the company. And if it is related to the ownership of the company, to find out who is the owner and things like that, whose share, because it gets very mixed up in complicated in large organizations, right? So if there is a specific investigation into the ownership, that whether that particular owner who is who is here is probably he has done some fraud or under scanner, please find out where is his other contracts, or he has other management interest, other management interest if he has. Is he a director in other company? Is he a director in some other, partner in other firm? Is he with any trust? Whole lot of things. There can be whole lot of things. There can be whole lot of things. All right. So keep that in mind. We will discuss this. And then there is non-statutory. Non-statutory can be anything. Investigating on behalf of a partner, incoming partner. Here we are talking of a partnership firm. You take a new partner is joining, and he wants to know that whether the picture that he is getting about the firm is good or not, is true or not. So he wants to review, investigate, and then only he can join. Or he will take the decision to join or not. Investigation for valuation of shares in private companies before they go for for IPO or things like that. Investigation on behalf of the bank. This is one of the major area of investigation in today's world. Okay, investigation of frauds. I mean, there are examples, loads of examples, unfortunately. Okay, investigation on behalf of an individual or a firm proposing to buy a business, and investigation in connection with a review of profit and financial forecast. So, we will go into the section 210 of the Companies Act 2013, whereby the central government can appoint inspectors to investigate into the affairs of the company. What does it take? What does it say? It says that it might ask for such investigation, it might appoint investigators on receipt of a report of the registrar or inspector under section 208. Alright? On intimation of a special resolution passed by the company that affairs of the company ought to be investigated. It could be such that also in public interest, or it may be may order an investigation into the affairs of company where an order is passed by a court or a tribunal, or it can be by any court in that matter, tribunal in any proceedings before it, that the affairs of the company ought to be investigated. That they can give the proceedings, they can give the proceedings, they cannot give their judgment without another investigation. These things happen again, isn't it? That the court has initiated a proceeding against so and so. That means some case is going on. Court cannot make a judgment. They cannot give a judgment until they understand further detail, which they cannot do, that is not there within the jurisdiction. So they say that we need an investigation, and they instruct the central government or whoever that we need or we need an investigation, and central government, if they receive such kind of a intimation, they can appoint a inspector to investigate into the such affairs. For the purpose of this section, the central government may appoint one or more persons as inspectors to investigate into the affairs of the company and to report thereon in such manner as the central government may direct. So the scope of the inspection should be very clear. So scope of the investigation has to be very clear, that what would be the form of the report if it is falling under, if it is coming from the central government and under section 2110 of Companies Act. So an inspector must be careful about that who's asking for such investment. Is it at the behest of some tribunal or something where the proceeding is going on and the court cannot give a judgment because they want this investigation and how to report. So you leave it to the your sponsor to tell us how to report, and we will follow such instructions. Okay. And section 212, it talks about the CIFO. So what it does, serious, without prejudice to the provisions of 2110, the central government where the central government is of the opinion that it is necessary to investigate into the affairs of the company by investigating by a investigating office on receipt of the report. SFIO. This is talking of the SFIO, right? So 212, here the central government, which department of the central government is doing? This is the Serious Fraud Investigating Office, okay? SFIO office. They are requesting a investigation, okay? So it is not in conflict with the 210, it is 212. And for you to remember for your exam purpose, So if SFIO is asking for an investigation, the other investigation should stop. Alright, so other investigation should stop. So on receipt of a report from the register or inspector, as again under section 208, on intimation or a resolution passed by the company that its affairs ought to be investigated in public interest, or on request of from any department of the central government or state government, the central government may by order assign the investigation into the affairs of the said company to the Serious Fraud and Investigation Office. Central government got the intimation that, from the request from the central government or state government that we need a investigation for so and so, situation or case. And if the central government decide that it is of such serious nature that it should go to the Serious Fraud and Investigating Office, it should be going there. It should be directed to them, to the whom it should be directed to Serious Fraud and Investigation Office, which is again part of the central government only, and its director. Then its director, they will designate the number of inspectors. It could be part of them. It could be, hired, and a member can also be part of that hiring. But again, as I said, it cannot be the firm, as he may consider necessary for the purpose of such investigation. Keep that in mind. And section 213 in the other matters, like the tribunal may, on application made by not less than 100 members or members holding not less than 1/10 of the total voting power in the company having a share capital, they have a case against the company, and the tribunal will say that yes, if it is suppose 100 members, or a member having or a shareholder having 1/10 of the voting right, he can single-handedly go to the court and put up and start a case against a company for whatever reason. And in such a case, section 213 applies, that the tribunal may request for a investigation, or not less than 1/5 of the persons on the company's register of members in the case of a company having no share capital. So with a share capital, 1/10 of the voting power, or 100 members and more, or in case having no share capital, 1/5 of the persons who are members in the member register, and supported by such evidence as may be necessary for the purpose of the showing that the applicants have good reasons for such a request for investigation. They just cannot go and say it's not a public litigation. It's not a PIL that there will be an investigation. We have to give, even a complainant has to give a proof that I have sufficient proof. So, and I'm seeking an investigation. I cannot do it myself. Naturally, they have restrictions. So, he goes to the court with evidence, and if the court feels it right, they can initiate an investigation under section 213 of the Companies Act, or an application made to it by any other person or otherwise. Anybody can do it. Okay, so keep that in mind. 216, the ownership. It talks about the ownership of the company, where it appears to the central government that there is a reason. There is a reason it may appoint one or more inspectors to investigate and report on matters relating to the company and its members for the purpose of determining the true persons who are.
Ma'am, we need to wind up.
Okay. Oh, it's past 10. Okay, my dear students, we will continue day after tomorrow with this section only. I will start with section 216, detail of the investigation, and then we'll slowly go to the, frauds, and then to forensic. So thank you. If you have questions, you can post it here for me to reply. Otherwise, I think we have already replied all of the questions that you posted online classes. Thank you very much. Have a good day, students.